just a matter of a couple of quarters. As the synergies start coming through with HDFC and the expectations in terms of a rate cut, probably giving some respite in terms of the NIMs and spreads, along with what technological advancements we are probably expecting to see for the entire network as a whole, I think there should be some significant improvement in earnings. But at this juncture, I think ICICI Bank within the larger private banks is something that we've kept on our watch list. Our take is that advances growth should be quite strong for the bank itself. Provisioning has been well laid out for the bank, and the expectations in terms of most metrics, in terms of balance sheet improvement, should be quite evident over the next few quarters.
Okay, well, many more stocks. By the way, HDFC Bank, I know there has been a recovery in the last 1 or 2 months, but if you map a 6-month chart of HDFC Bank, it's really not done much. So yes, there's buying on dips in HDFC Bank from the lower levels, but give and take everything in the last 6 months, the stock is absolutely flat. So let's see if there's any kind of outperformance that HDFC Bank showcases in the next couple of weeks and months. But for the markets, it's not bad actually. We closed around the 23,500 mark yesterday. Global cues are slightly soft. Tech stocks across the US have been under pressure, but Anuj is back. Anuj is joining in this morning to tell us what to expect as we head into a brand new day of trade. Anuj, good morning.
Morning, Sonia. I was back yesterday, and of course, belated happy birthday to you, Sonia. Well, for the market, of course, yesterday's price action reaffirms one clear texture that it's buy on dips. And the Nifty, it looks like, is headed towards perhaps 23,650 to 23,700 thereabout. The Bank Nifty is looking stronger than the Nifty itself, and there's very strong momentum in the mid-caps. My sense is that this is a market which is now sensing a bit of a pre-budget, pre-earning season rally, and that, of course, would be the next two triggers. The only sort of risk would be that normally the first budget of a new government is one where you expect tough decisions. So noise on the tax front and the capital market would once again start. So that could be a bit of a risk factor for the market. Now, if you look at the trade setup, after a long time, we've been used to seeing FIs net short by 1 lakh contracts. After a long time, the net long has gone up to above 1 lakh. Almost 60% long and 1 lakh long contracts. Now, on a normal time frame, that would be a bit of a worry. But because we're in expiry week, just 2 days to go for the expiry, so maybe the market would give it benefit of doubt. In terms of levels to watch, on the Nifty, the first support is 23,350 to 23,400, which is where yesterday's low and 10-day exponential moving average is placed. And then 23,262 to it should be 23,342. I wrote 32 by mistake. Next resistance is 23,647 to 23,667 based on options and all-time high, and then 23,688 to 23,791 based on the hourly charts. The Bank Nifty, which I said is looking stronger. The first support here is 51,350 to 51,500, and then 51,100 to 51,150. And on the resistance, we have 51,900 to 52,000, the all-time high zone, and then 52,150 to 52,200. As always, I leave you with one quote of the day, and this one comes from Coco Chanel. Don't spend time beating on a wall, hoping to transform it into a door.
Well put, Anuj. Thank you very much for that. Mayuresh is still with us on the show. Mayuresh, wanted to get your thoughts in on Amara Raja. The company signed a comprehensive lithium-ion agreement with a Chinese-based company. How much of an impact do you see this having on Amara Raja? Because I think the stock also trades at a discount to Exide.
Oh, yes, it absolutely does. And to a large extent, if you probably look at the battery makers, it's largely a oligopolistic market. So I think Exide and Amara Raja have a large part of market share as far as batteries are concerned. And when we're talking about internal combustion engines, I think that will still continue, at least for the next few years. As the transition happens in terms of electrical mobility and electrical mobility platforms as well, the kind of Capex that both these players have done over the last few months and expectations of this Capex fructifying in terms of capacities coming on board, 6 gigawatt hours each, if I'm not mistaken, and a substantial increase after that as well in the next few quarters will mean that they will be sufficiently having utilization levels to probably service the EV market as well. Let's not forget the replacement market is doing reasonably well for both these players as pricing probably remains in their favor. And again, the 30% component in terms of their top line as far as industrials are concerned should remain on a steady state basis as far as top line and EBITDA is concerned. So yes, I think Amara Raja trades at a discount, but I think both these players are sufficiently well poised in terms of business dynamics to drive their earnings going forward. So I think they've been very, very optimistic on both the battery makers.
Okay, all right. We'll take a quick commercial break here. Mayuresh is, of course, with us, and we'll continue the chat with him. But we'll take a break. We are back with our technical experts as well. So short-term sort of trading ideas from here out. Mitesh will be with us, and so will be Sudarshan to help you with that. Stay tuned.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like, where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more.
Okay, welcome back. We've got 10 minutes to go as far as the market pre-open is concerned. Sudarshan and Mitesh are with us with what they're making of things. Gentlemen, good morning. Good to have both of you here. Mitesh, if we can start with you, 200-point bounce. We were chatting in the late afternoon yesterday, and you were saying that you were thinking there perhaps was a little more on the downside. The market came right back up. But it has been a little grinding move, right, for the last 5-6 sessions now. So what do you do from here?
So, Prashant, I think, while the overall structure is very good, what has happened is that on the intraday chart, which is the hourly to hourly charts, we saw overbought readings especially after the rally, which started the next day of election results. And from 21,800 to about 23,500-600 levels, there was a non-stop rally. And now we've gone into some kind of consolidation. The good thing is that we aren't correcting severely, or it's not a big declining kind of movement, but more of a pullback to the averages, as the indicators slowly keep coming out of the overbought situation. So I think this is a healthy process. Overall, it doesn't look very threatening unless until we see the market start and trade below 23,300, 250 zones. So I think till then, the way to approach the index would be now to look for any intraday declines closer to about 23,300 and then try and take a long position, or wait for a breakout about 23,600. I think once this consolidation is over, you might see the uptrend resume.
Okay, so Sudarshan Sukhani is also with us. Sudarshan, hi, good morning, and thanks for joining in. This has been a very strong market. I mean, give and take some volatility here and there, we are still continue to trade at record highs. Do you think we can build on to these gains over the next fortnight or so? And what's the trading strategy for today?
Yeah, good morning. I think we are entering into a process of consolidation. Now, within that process, it is possible we may see a new high again, but it's likely to be temporary rather than a sustained up move. This market needs to consolidate, build a large base, and then only a much more genuine up move is expected. So for the time being, even if we have a breakout on the upside in the next 15 days, it's unlikely, to me, it's unlikely to be sustained. The trade then is that wait for this consolidation process. It will take weeks, not days. And for today, until then, there is no real opportunity in the Nifty till this consolidation begins and ends. For today, the trade still remains the same. Avoid the Nifty, focus on the Bank Nifty.
Sudarshan, what would your specific trades be?
Yeah, it's a mixture. And the reason simply is that the market itself is giving me confusing signs. Havells is a buying opportunity. That's a positional trade also. Buy Havells with a stop under 1810. Nalco National Aluminum is a buy with a stop under 176. I have two intraday shorts. Remember, you don't have to take them. And they are always intraday. Never carry these shorts. So Hero Moto is a short with a stop above 57.75. And Titan is an intraday short with a stop above 35.65.
Mitesh, what are your trades?
Morning, Prashant. I have all buy calls. McDowell's or United Spirits gave a good turn yesterday. A lot of positive crossovers on the moving averages. So buy here with the stop at 12.74. Look for targets of 13.50. InfoEdge has been an outperformer in the IT pack, and yesterday was another fresh high. So buy here with the stop at 6,500. Look for targets of 6,800. A buy on ICICI Bank with a stop at 11.50 for targets of 12.05, and a buy on Grasim with a stop below 24.90 for a target of 25.70.
Okay, thanks for that. Well, we will also get Sneha Seth, derivatives research analyst at Angel One, joining in now to tell us some F&O cues for the day. Sneha, hi, good morning, and good to see you in. This market has been trading with quite a bit of, the buy on dips is a strategy that has been working. So it's been trading with strength in that case. How are you positioned today, and what are the stocks to look at?
Very good morning, Sonia. If you look at the market, yes, it is showing strength. But if you look at the FI's data, the FI's long short ratio has jumped up to 59 now, which is heading towards a little bit overbought zone. So I won't be very comfortable going aggressively long in key indices at this point in time. I would wait for a dips, and then maybe we can go ahead and take any fresh bets. In case of Nifty, I believe 23,300, 350 is the support zone. On the higher side, any move beyond 23,700 would be interesting. Banking index has been showing strength, so maybe possible that banking index can perform because private sector banks are placed at a good levels. So one can focus there, but in Nifty, I would say one should avoid any aggressive longs at this point in time. Individual counters are concerned. I believe Voltas is a buy for me. This counter was up nearly 2% yesterday. It has been taking support nearly 20 DEMA on the daily chart. I think we can go ahead and long this counter for the target of 1567, and the stop loss can be maintained around 1478. Apart from this, Ashok Leyland looks good. If you look at the chart structure, this counter has been trading near the record highs only. So I believe we may see an up move at least towards 1520 odd zone, and one can keep a strict stop loss around 1380.
Yeah, thank you very much for that. Need to get into a short break. On the other side, the pre-opening rates. We'll also be joined by Bino Pathiparampilya, Pharma analyst and head of research at Elara Securities, to discuss the trends in the pharma sector. Stay tuned.
Shifted in the last couple of years, which has been truly profound. We today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Right. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at Nvidia today.
Yes.
And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then.
Welcome back. Well, we just have a couple of minutes left for the pre-opening rates. A couple of, actually, just 2-3 minutes before the pre-opening rates kick in. But let's focus on the pharma sector now. Bino Pathirapampil, the pharma analyst and head of research at Elara Securities, joins in. Bino, hi, good morning, and thanks a lot for joining in. First, if you can just give us the overall view on pharma. I actually wanted your views on Sun Pharma. I'll come to that in a bit. But overall, how are you looking at the sector and, what are your top picks in this space? And then we'll move on, of course, to individual stocks.
Sure. Good morning. So we continue to have a constructive outlook on the pharma space, especially the US generics market. As you know, the US generics business and the domestic business are the two main buckets in the pharma industry, as far as the pharma industry is concerned. Of these, the US generics business has really picked up over the last few quarters for almost all the companies. The pricing pressure has eased, pricing has stabilized, and a lot of new opportunities are coming up in terms of new generics. This trend, in our view, will continue for next few quarters or maybe a couple of years more. We have a long patent cliff coming up. Prices have hit a rock bottom level from where significant pricing pressure is unlikely and competition has eased. The domestic market business has been on a weaker wicket in terms of growth over the last few quarters. It still continues to be a little weak, but we do expect some sort of recovery. Valuations have expanded a bit, but still not extremely stretched. So overall, we see further continued upside momentum in the pharma sector.
Now coming to individual stocks, right? Your thoughts on Sun Pharma, because now the merger of Taro is complete. Taro is now a private company wholly owned by Sun. What does this mean for shareholders and what is your long-term view on Sun Pharma now?
So Taro coming completely into the Sun fold as a private company does help Sun, extract more synergies with Taro. Taro, as you know, is a dermatology-focused generic company in the US, and Sun is Sun has a specialty business which is again dermatology focused. So there could be a lot of synergies that Sun can extract from completely having Taro completely in its fold. I do expect some of these benefits to flow into the P&L over the next few quarters, may result in some margin improvement in Sun. Apart from that, Sun's specialty business is doing exceptionally well. The key product, Lumia, continues to grow exceptionally well. There are other new products that are likely. Durolixatinib for alopecia is expected to hit the market later this financial year or maybe early next financial year. It could be another fillip to Sun's specialty business. Also, there are more important products in the pipeline. Recently, the company has announced good phase 1 data from a GLP-1 product. It's still pretty early in the clinical trial stage, but if it goes through well, GLP-1 products, as you may know, can be pretty big. The major products in this segment, like Ozempic, Wegovy, Mounjaro, etc., from players like Eli Lilly and Novo Nordisk, are raking in more than $50 billion globally. So there are a lot of potential products beyond the existing products as well. So overall, have a constructive outlook on Sun Pharma as well.
Very quickly on Sun Pharma, on that yesterday's announcement, as you spoke about the GLP-1, the obesity drug, and how the initial trials were encouraging. Are you baking it in any of your estimates, or it's too early?
I guess it's too early to bake that into estimates. It is has just completed the phase 1. It has to go through a phase 2 A and possibly B, and then a phase 3. All these could be at least a 3 to 5 year horizon. So it may be 5 years later that it will hit the market, if at all.
Okay, what about Cipla and the Goa facility getting 6 observations? How do you read this development for the company?
It is a little disappointing. The facility has been under a warning letter for almost 4 years plus now. We were expecting a resolution this time round. It's still early to say, but having got 6 observations, it looks a little risky to call a resolution of the issues there. One key product that we had built into our estimates from that facility is generics Abraxane. So the launch of this product in the US market could get delayed because of this development. We will wait for FDA to make their final decision on whether to remove the warning letter status on the facility or not. If not, there could be some minor downgrades to our current estimates.
Bino, hi, morning. Do you have coverage on Biocon?
Sorry, I don't have coverage.
Mankind Pharma, Bino?
Sorry, I don't have.
Okay, I know what you have coverage on. You buy on Zydus. I mean, which are your what you have buy ratings on? Dr. Reddy's and Fortis. Really, I want to actually start with Fortis and sort of talk about that. And sort of just you must have looked at the other listed hospital players. There's been lots of interest in that space. It's as a sector with growth potential. It's a secular story. Why Fortis, and how does it rate against peers, Bino?
Sure. So over the last 5 years, we have seen a major upcycle in the hospital sector. We have seen occupancies going up. We have seen revenue per bed going up significantly. All the companies' margins going up from going up by almost 500, 600 basis points over the last 5 years. Looking ahead, the path may not be as smooth for the hospital sector because a lot of capacity addition, a lot of bed addition is coming in the sector over the next 2-3 couple of years. So in that context, at a sector level, I would be a little cautious, although it's a structural story over time. There is still significant upsides to these stocks, but will there be an interim softness in margins and profitability is a question around which I would be a bit cautious. But within that, Fortis looks relatively better placed because it does not have very big greenfield capacity addition coming up in the next 3 years. At the same time, there is also a margin expansion story playing out there. They are improving their operations significantly, controlling costs. Operating leverage is setting in several of their hospitals. All put together, I expect another 200 basis points margin improvement in their hospitals business. And on top of all of that, there isn't a lot of expectations built into the valuations at current level. It is still cheaper compared to many other hospital stocks. So all this make me look very positively on Fortis.
Okay, thanks Bino for joining in. Appreciate your time here. By the way, the pre-opening rates are now settling and they're settling higher, slightly higher. So up almost about 40 odd points. And you have Bharti Airtel, which is your top gainer. L&T is up about 1%. Tata Consumer is up almost about 1%. And the Nifty is holding at 23,600 thereabouts. Ekta is joining in with today's Momentumizer stock of the day. Ekta, over to you.
Thanks for that. Well, I'm looking at Minda Corp. It's a part of the BSE 500. It's an auto ancillary company. The stock was up around 4% in yesterday's trading session. It's up 78% from its 52-week low of around 277 odd rupees and is very close to its 52-week high. It really is at its 52-week high of around 497 odd rupees. Now, news which has been positive to add to the momentum recently is that they signed a JV with a Taiwanese company. This just took place in the past 2 weeks odd. This is to locally manufacture sunroof solutions and closure tech products for passenger cars. Separately, during Q4, the company secured orders worth 2,000 crores, with EVs constituting around 30% of their orders. And as of FY24, their order book was worth around 10,000 odd crores. Seems as though the momentum is in place for further upside for this stock.
Okay, thanks a lot, Ekta, for that. Well, one more stock that we're looking at this morning is Amara Raja Batteries. In case you missed out on the news flow, Amara has signed a technology licensing pact with a Slovakian company, GIB, which is Gotian Inobat Batteries. This is basically for lithium-ion cell batteries, which is a big growth area for this sector. Just look at the stock, up almost 8% in pre-opening now. Amara recently upped its stake as well in the Slovakian company Inobat to 9.3%. They invested 20 million euros for an additional 9.3% stake. And Amara is going big in this new energy space. So they have invested 9,500 crores in Telangana for advanced research and innovation in new technology. Now, brokerages are bullish. Investec has a buy with a target price of 12.50. They say that this deal enhances Amara Raja's capabilities in the transition to lithium-ion cell manufacturing, while JP Morgan has a neutral with a target price of 12.10. They say the company is taking the right steps. They are confident on the company's ability to progress towards their 16 gigawatts capacity target. So big move coming in on Amara Raja Batteries this morning. But let's go across to Sudarshan Sukhani now to get the 9-10 call of the day. Sudarshan, over to you. Sudarshan, if my voice is reaching you, I wanted your view on the 9-10 call of the day. Yes.
Yeah, sure. Havells is a buying opportunity with a stop under 1810.
Okay, Mitesh, what would your 9-10 call be?
I'll go with a buy on United Spirits for targets of 1350.
Mitesh, just two or three more names, and this is, of course, from what we saw yesterday. One is Mahindra and Mahindra from the large cap space was the top mover. Autos came back, and of course, this has been the clear leader. How are charts looking for this one?
Prashant, good for short-term trading. It had a 4-day pullback and then reversed from there. So good for a short-term trading. I would recommend with a stop at 2850. But if somebody wants to take a positional trade, I think the last movement started about 1,100 rupees lower. So not the best point of, if somebody wants to play for a few weeks. But yeah, for next couple of days, maybe it will make a new high again.
Just one more name, Root Mobile. So a very large move backed by big volumes. Is there a breakout or something here? And if you want to weigh in on Bombay Dyeing as well, another big volume-led gainer.
So Root Mobile, I think, made a high of around 2100 plus way back in July of 21 and then went through a big correction. I think their entire long-term chart is reversing. My sense is that yesterday's high 1800 is some sort of pivot on the older chart, but once that is cleared, it is heading towards 2100 plus level. So very, very positive on Root Mobile from a medium-term point of view. Bombay Dyeing, after a sideways activity, has broken out. So again, that could be a good short-term to medium-term swing trading kind of candidate. Keep a stop at about 186 and look for targets of 225.
Okay, thanks a lot for that. Well, for now, the market, the pre-opening rate is settling a bit higher, about 40 points higher. So let's talk about the primary markets now. If you fancy drinking whiskey, especially Officer's Choice whiskey, then perhaps you'd like to look at the makers of this as well. Allied Blenders, the IPO opens today. Mangalam is here joining in to tell us what to expect with this one. Mangalam, morning.
Good morning. So the IPO for Allied Blenders and Distilleries, or ABD as we call it, opens today. Opens today for the next 3 days with an issue price or a price band of 267 to 281 rupees. They're seeking about 1,500 odd crore rupees, of which fresh issue would be 1,000 crores, and the promoters will be selling 500 crores with a post-issue market cap at closer to 8,000 crores, 7,860 crores to be precise. They've already raised about 450 crores from anchor investors, and some of them include some large domestic funds like Nippon Life, Jupiter Global, and MNCs as well. Important to note, this is the largest India-owned Indian-made foreign liquor company, the third largest IMFL company with a pan-India sales and distribution. You would know it better as the company that owns and sells brands like Officer's Choice Whiskey, Officer's Choice Blue, and Officer's Choice Sterling Reserve. Whiskey accounts for nearly all of their sales, and it's a strong brand. So that's one strength of the company. They have market leadership in the mass premium segment with almost 21% volume share, and the possibility of them scaling premium brands like Iconic and the other higher price brands would be a decent opportunity for them. The biggest weakness for them would be the competition that is from peers, which is coming in, the larger domestic and MNC peers. We have the margins which are 7%, which is again lower than United Spirits at around 18%, Radico Khaitan at 12%. And it's an alcohol industry, right? So there will always be some sort of regulatory overhang which may play out. They've done revenues of almost 2,600 crores in the first 9 months of this year with margins of around 7%. The money that they will raise will be used to repay debt. So the debt that they have is close to around 800 crores. So that will aid their profitability as well. Their valuation that they're seeking is around 2 times sales and 31 times EV to EBITDA, which is actually a lot lower than 8 times sales that United Spirits trades at and 6 times that Radico Khaitan trades at. But at the same time, from an EV to EBITDA basis, they're pretty much about a 15 to 20% discount. Let's see how it goes. Reducing debt, increasing profitability, and increasing premium products would be something that the street would eye.
All right, Mangalam, interesting one. Thanks very much for that. And of course, we'll track how the subscription, etc., plays out as we go along. Lots to track, right? And let's just sort of take stock before markets open in another 2 minutes or so. So Zomato, if you can pull this up, pull these stocks up, Zomato should be in focus, as we've been highlighting. Mangalam has been highlighting more market share gains. Basis, the process filing that happened, I think, yesterday. You got brokerages, etc., writing on this aspect as well. Stock did well yesterday. It's past the 200 rupee mark. Amara Raja, Sonia has been, of course, talking about this one, where they've tied up for technology with a global player for lithium-ion battery. Stocks up 6%. That's a big move coming through. So that could be actually to begin with in terms of stocks with news flow, the stock to watch out for. 2 other names, maybe look at Craftsman. I saw Craftsman, which has entered an agreement to acquire another company. It's up 2.5–3%. It's a well-run South-based company, but there are no volumes there at all. So maybe give it some time. Sansera Engineering, a small name, but you got to... initiations all around, right? Spark, which is Avendus now, they've initiated coverage on the Sansera. It's starting 5% higher. Volumes are low, but not Spark, but Spark has initiated coverage on Sansera. So 5% there, 13,000 shares is what the pre-open showed us. And I saw an initiation of JSW Infra as well. So we'll kind of track that as well. The market opening coming up on your screens, and what do we have? 23,580 on the Nifty, 77,510 on the Sensex. So these are first rate, is a good start. 50 points after yesterday's 50-point high close. The Sensex is up 170 points, and I think you've got the Nifty Bank, which is starting. It'll come up on your screen. We'll see if there is any sort of movement. Yeah, there is. Last hour yesterday showed some signs of life. 100 points, about 0.25%. Last week was good. Keep an eye out on some of the private banks and PSU names as well. IT index is absolutely flat. And maybe just look at the mid and small cap part of the market. I'll give you a sense. Small cap index didn't do very much yesterday. But the mid cap index was up about 0.4. I think the small cap index is starting absolutely flat. The mid cap index is up 0.25% once again. So it's not a bad start at all. This Tuesday morning.
I think, it's a very good start, especially in the mid-cap index. Just look at that, 230 points higher now. Happiest Mind is the one that's taking a big beating because there's 8% equity that has changed hands over there, and of course all the news flow surrounding it. So Happiest Mind is the one that's down 8%. But on the upside, Amara Raja Batteries is really the stock in focus. 11.5% higher on Amara Raja Batteries now. Big volumes are picking up over there on the back of the technology collaboration that they've signed for lithium-ion cell batteries. So a lot of brokerages believe that this is a step in the right direction. This is a re-rating moment for Amara Raja Batteries. Both Amara and Excite actually have seen huge re-rating in the past many weeks and days. Zomato, let's look at that one. Data shows that Zomato's market share has expanded across both its food delivery and quick commerce segment. So the stock is up about 2.5%. But let's not forget that the stock has rallied about 60% in the last 6 months alone. That's the kind of move that we've already seen. How much of it is in the price, no one knows. But for now, Goldman Sachs also saying that the scale of Zomato's growth in quick commerce is now 50% larger than its competitors. So big moves coming in over there. Apart from that, you have many other stocks that are looking, not too bad actually this morning. A couple of the sugar names are doing well. But on the flip side, apart from Happiest Minds, there's Bandhan Bank that's down about 3% IRDA is a tad bit under pressure. Railtel is down about 0.8%. So these are the list of movers in the broader market. From the frontliners, the one that's really holding forth this morning is HDFC Bank and SBI. So both these stocks are up 0.5%, making sure that the Nifty stays above the 23,580 mark.
Well, there's one more stock, Crystal Integrated Services, and here Nuvama has initiated coverage on the stock, and the stock is surging. It's a small company, 1,200 crore in market capitalization. It gets more than 50% of its revenues from managing facilities for companies, lots of government business. They also provide staffing, catering, and that stock is up close to about 6-7%. The target price set by Nuvama on Crystal Integrated Services, it's Crystal with a K, is 1,369, which means a good 75% upside from current levels. They believe the valuation is attractive. It's just trading at about 11 to 11.5 times forward multiple. So that's a stock, which is seeing a lot of action today. Borosil, where the company has launched a QIP, 150 crores is what they're looking to raise. The stock has surged about 5.5%. And TBO Tech continues to see buying from yesterday. It was one of the big winners, a 7% up move, 8% I think on TBO Tech yesterday. It's followed it up with another 4% gain. And today, Axis has initiated coverage with an ad rating. Target price is 1,920, valuing it at 50 times FY26 PE, they say. But they do acknowledge that an 80% up move since the listing leaves modest upsides to their target price of 1,920. All Cargo also, which, where there is news, the stock is open with a gain of about 2.5%. Bandhan Bank is under pressure. The news appeared to be neutral, the appointment of a retired RBI person on the board, but the stock is under pressure, and that's down close to about 3%. Some weakness coming through in MRPL, IREDA, JK Paper. These were some of the stars in yesterday's trade. Many railway stocks which rallied, like Ircon, are seeing some amount of profit booking. And on the way up, it's, I think Amara Raja, which is now up close to about 10%. And PNB Gills is also rallying on pretty good volumes.
I mean, it's a market full of stocks, right, which is how it should be. I mean, at a broad index level, you'd kind of say, well, there aren't that many cues, and that you'd be absolutely right. But then it would be a mistake not to look beyond the surface where there is so much action and activity. Actually, at an index level as well, I don't think there is anything to really complain with the market cruising along quite nicely. So that's the overall picture which is coming through at this point in time. So the big block deal, which is Happiest Minds, taking place, stocks down, of course, reflecting the discount which is on offer. And otherwise, I mean, it's a very strong day. Amara Raja, as we were talking about earlier, is perhaps the stock of the morning at least, with a big 11-12% gain. So we'll talk more about this, and hopefully we'll have the management join us over the next couple of days to talk about this in terms of what it means. I was reading a note from Kotak in the morning, Kotak Institutional Equities, who were essentially saying that, because their view is that the valuation as of yesterday's close already kind of prices this in. I mean, technology transfer, etc., is good, but it's always the question of what's in the price and how much you're willing to pay for it. But right now, this morning, market's very happy with what has been done on Amara Raja. So that's what we have. We have Shreyas Devalkar. He's head of equity at Axis Mutual Fund. He's joining us now to talk to us about markets, talk to us about how they are positioned. Shreyas, good morning. Good to have you with us here. Thank you very much for your time. Prashant this side. Shreyas, vibrant market, isn't it? I mean, if you're willing to maybe sort of go down the curve a little bit and widen the horizon, as many on the sell side are doing with newer initiations, etc., every day, a few at least. How are you looking at how are you and the team at Axis looking at markets from here, Shreyas? Many have complained that, well, it's kind of hard to find ideas. But are you of that view, or you think you got to be willing to maybe look a little lower down the market cap curves now? Go on.
Yeah. Good morning. Actually, as far as markets are concerned, always at this stage of the market, it always gives us a feeling that all stones are turned and nothing is left. And that's where the existing, the stones which are turned already, obviously are at the elevated valuation. So at this juncture, there are two ways that you are suggesting. One is you try to find out more and more That process, irrespective of market, is always on. It's not that current level. But then there are certain opportunities which are there around data centers, there around EMS, and more are coming up. More companies are tying up around those spaces. So those opportunities in that segment especially is where probably currently market is trying to find out more ideas. But when it comes to the segments like power, defense, and all, their market has definitely evaluated and discovered most of the stuff. So that's where at this juncture, the point comes back to what is and where is that sustainable growth. Just try to sit back and try to see that beyond the themes and where there is really growth and where there is a risk reward favorable. And then when you observe that, then what you will observe is, especially when it comes to the movements of large, mid, small cap segments in last 4 years almost, it is observed that generally in the large cap segment, some of the pockets which has underperformed definitely, and that's where we are also trying to find out ideas now where there is where market has focused overly on near-term growth and valued them at 50, 60, 70p. So instead of that, try to focus on where the growth may be relatively less at 12 to 18% kind of growth instead of 25 to 30, 20, 15 to 30, 25% of growth. But then the valuations are really in favor, and especially adjusting for the free cash flow generation ability of such businesses. So this is how we are looking at this juncture.
Okay, by the way, I just wanted to mention a couple of stocks along with Amara Raja Batteries, which is now, by the way, up 15% on the back of that technological arrangement. Exide is also at a fresh high this morning. So Exide is up 3.5%. It's a fresh 52-week high. Both these stocks, because of the huge potential in lithium-ion battery manufacturing, Amara and Exide are really surging this morning. Indian Hotels is the other one, fresh high on that name. The evergreen theme of travel continues, travel and tourism. So Indian Hotels is at a fresh 52-week high, almost at 660 rupees now over there. And a couple of other names that stand out: ITD Cementation, Suprajit. Trent is at a fresh high, 54.27 now on Trent. Big moves coming in on that name. Shreyas, hi, good morning, and thank you for joining us on the show. I wanted your thoughts on quick commerce, right? Just because Zomato is in the news so much, I mean, data shows that Zomato's scale is now 30% larger than Swiggy, for example. And, we've all seen the way Blinkit is performing. If someone has missed out on this rally so far, do you think this is a structural story, a structural upcycle in some of these consumption names?
So good that you highlighted and tried to focus on the consumption names back, because generally market has been more focusing on the investment part of economy, especially and in last 2 to 3 years, and rightly so. Some of them have shown that kind of movement. But when it comes to consumption, definitely there are structural changes and the underlying trend which is happening. And one being especially in the retail industry. So retail industry, what we have observed is there is, so if you just try to break your consumption space into the FMCG versus retail, then generally we always positioned ourselves more on the retail side because there is a room for growth in that. And in that retail industry, now these are the next steps. So first is home delivery started with, then quick commerce. And considering the demographics, considering the diverse nature of India, it's both combination of city, then there are suburbs, and then there is a demand from the new age, the new generation, and that's where the consumption trends and the patterns and the usage patterns are changing. So first is obviously the trend is on, but then as an investor, we need to definitely focus on the profitability, our path to profitability. And we have seen that when it comes to home delivery, the profitability part was not lucrative earlier. But then end of the day, first even QSRs never used to show very high profit, and then the QSR started showing profit, and that was the first form of the home delivery. Then the other companies which are the which started with the home delivery as such quick commerce, they also started showing you path to profitability. So quick commerce also with the scale and learning, etc. So we hope that even that part also shows path to profitability.
Shreyas, morning. You also manage the Midcap fund, the Midcap fund, and you've been active on that front. where the argument on valuation versus liquidity, because liquidity appears to be driving up the valuations to astronomical levels in some cases. So how are you managing? Because if you miss out on it, then the fund underperforms. So where is it that you're seeing value right now? Take us through the thoughts of picking up mid-cap stocks now.
Sure. So mid-cap, if you observe in last 1 year or so, actually the observation is for 2 to 3 years, but especially last 1 year or so, definitely the valuations are elevated. Generally, among large, mid, and small, one observation is mid-cap segment had a higher proportion of PSU in the underlying benchmark. So it is upwards of 15% in the underlying benchmark, the PSU contribution. And that's where the mid-cap as a segment actually outperformed or did in line with small cap in certain time period. And it has outperformed more because of that, because PSU rally has seen a very sharp rally in last 1.5 to 2 years. So that is where the mid-cap segment is. Now, if you just try to dissect that segment, then the capital goods part, that part definitely, and anything to do with industrial, so it's industrial capital goods, that part definitely it is at elevated valuations, no doubt on that. There are pockets, especially in the consumer durable part, and in overall consumption space, there probably the stocks have not moved a lot in over last 5 years. So that's where we are just looking at more of where there is a lack of re-rating over a 5-year period, because in last 2 to 3 years especially, everything has gone up. So that re-rating potential where there can be with the delivery of earnings, that's what we are trying to look at. And that space one need to find, especially in the consumption basket. Mid-cap, generally you'll observe that FMCG has higher representation in the large cap, while mid-cap has more representation of consumer durable and discretionary.
No, got that. Shreya, stay with us. I'm going to come back to you for more, but let's also bring in Niket Shah, who's with us. He's Chief Investment Officer at Motilal Oswal Mutual Fund. Niket, good morning. Good to have you with us here. It's been a while since we've had a chat. Just weigh in on how you are approaching markets from here on. Let's just actually dive straight into one particular sector, right? Motilal as a fund house has been pretty bullish on this entire telecom theme. Vodafone Idea, for example, in the FPO, etc. He's done well since then. Now, of course, it's the test of actual tariff increases. Markets are waiting for it. What is your sense? What are the best plays here in the space, and what's the story? How is it likely to play out?
So thanks for having me here. I think clearly, as you articulated on telecom, we looked at this theme in the initial part of the year, somewhere around January or Feb. And I think two things to really play out. One is obviously the tariff hike, as you rightly articulated. But I think the second part is the balance sheet improvement, right? If you look at the last 10 years for telecom, there was impact on balance sheet because of the high Capex cycle in 2014-15. And then a tariff war which happened from 2018 to 2021, which deteriorated balance sheets for most of the companies on the listed side. What we are now seeing with tariff hike increase is the P&L will improve first, and then the balance sheet will start improving later on, which should actually lead to improvement in return ratios and hence valuation over a period of time. So we are extremely optimistic on this entire theme. We are in fact 7 to 8% overweight on telecom since beginning of this year. And we believe that some of these, themes like, the tariff hike increase or, the reduction in the AGR liability should actually play out over the next, 3 to 6 months.
Without getting outside of what is already published and what is available information, Niket, are these operators the best way to play the theme, or could it be, say, an Indus Tower? Do you have exposure there, just to kind of complete that loop?
So we actually have exposure across the board. We have exposure to some of the listed telco names, some of the equipment guys as well, and indirectly, from the leader in the business as well. So we believe the leader, which is obviously the channel that you own, is not listed, but I think you can obviously pay through the listed company out there as well, which is a holdco company as such for now. So we have actually played across the board. Every stock within the telecom sector is there in our portfolio today. We believe the whole ecosystem will do extremely well over the period of next 2 to 3 years. And we actually think that Indian tariff is actually at a substantially lower price than if you compare with anywhere in the global markets. So I think one should not assume that this is the last tariff hike and things are done. I think you should see a tariff hike even next year. So this eventually becomes a 2-year story for us.
Okay, that's very interesting. 2-year story in telecom and overall positive triggers for the sector. Niket, hi, good morning. Good speaking to you. I wanted your thoughts also on quick commerce. We were just having the discussion with Shreyas as well. And you folks at Motilal have been positive on names like Zomato for a bit. But I want to understand this from you. This growth rate that you're seeing, right, 30% GOV, 25% GOV, is it something that is sustainable? Because there's now increasing competition in this space as well. So for listed players, can this pace of growth continue?
So I think on food delivery, you should see about 25 to 30% growth sustaining at least for the next 2 years. And I think there is no major competition intensity beyond the two players that we're talking about. When you move to quick commerce, I think the growth rate will accelerate this year. I think the consensus expectations are about 60 to 70%. Our sense is that most of the companies in the space should actually grow at more than 120 to 130% this year. So I think the quick commerce is here to stay. And I think the growth rate will accelerate. Obviously, most of them have actually announced that they're doubling their dark store capacities this year. So it's driven by expansion of capacities. And I think obviously you are seeing traction within the existing stores as well. Last but not the least, I think the way this eventually is going to play out is, some of the larger e-commerce guys in India will actually get impacted over a period of time. If you look at our shopping habits today, something like a mobile phone, which was typically used to go to a larger e-commerce guy, is now going to be available on a quick commerce as well. So effectively, there will be a significant amount of value migration from a larger e-commerce players on the unlisted side. Obviously, some of them are MNCs to some of these quick commerce guys. So this will become a one-stop solution for a consumer, whether you're spending any money at home or if you decide to move outside your home and start spending there. I think entire value chain will clearly get captured over the next 2 to 3 years.
Morning, Niket. I wanted to get both of your views on the kind of supply that we're seeing. On one hand, promoters' funds are encashing, and it's making some people uncomfortable, just the pace at which we've seen block deals. But on the other hand, you can also argue that it's not just retail, who's buying the supply. It's also smart money, mutual fund managers like all of y'all who are buying the kind of supply. So what have you made of this?
Well,
Niket, if you want to go first, and
Yeah. So actually, to be very honest, we have been avoiding most of the blocks that has actually happened in the recent times. And we have, when we look at all of them on a case-to-case basis, it's very tough to make an investment rationale out there. We have been slightly more active on the IPO side of the market, but on the block side, we have been extremely inactive. And, in a cricket match, there are times where you hit a ball out of the ground for a 6 if there's a full toss, but there are times where there's a yorker. You really need to be very, very careful out there.
Shreyas, you want to weigh in on this debate of the kind of supply that we're seeing and the pace of it?
Yeah, definitely. So actually, when it comes to supply as such, definitely it is good, in my opinion, to the extent that in some of the segments, especially in mid and small cap, there is the free floats actually will increase in this. Now, the question is whether one should buy into it is really case specific, because on the one hand, higher supply and better free float is good for market and good for price discovery as such. While on the other hand, whether one should get into it is on a case-specific basis. We generally try to look at whether the company is getting the money or not. So certain criteria we have, and accordingly we act. So it's not a blanket answer for that.
Shreyas, just, when we started this conversation, you mentioned data center as an opportunity. Can you be sort of specific? If you own and it's public, what's the best way to play this theme?
The data center as an opportunity is definitely there, and there are multiple segments which are coming into this space. So it can be right from, so now if you look at the value chain in data center, so one is it is an asset owner or someone who is trying to build a data center. So generally it can be a real estate company, and most of the time it is a real estate owner because that is where from the owner's point of view, some of the value lies. And that's where there are certain companies which has gone into this space. Then when it comes to what is there in the data center, then mostly when it comes to its racks and its electronics, probably there will be limited companies one can look at into this space. But definitely then it goes to the power supply, uninterrupted power supply. It actually starts with the power supply right from the primary power supply to the backup power supply. And now here there is opportunity one can see. So you have to look at opportunity across. the asset owners and the suppliers. And always we have seen that over longer period of time, markets actually, so whether it is a power cycle or it is any other Capex cycle or any other asset ownership cycle, generally someone who is supplier, they have made market has made more money than the asset owners.
Got it. Got it. Niket, I wanted your thoughts on some of these battery makers, right? I mean, the kind of evolution that's happening in the EV space with this whole lithium-ion battery technology. Companies like Exide are, signing contracts with huge global players like Hyundai, Kia, etc. For an average investor, is there more scope in names like this?
Well, I think there is, because I think from a supply chain standpoint, clearly we are looking at some of these large OEMs looking out for an Indian vendor. So I think the one who really goes live first really has a big benefit out there in terms of sourcing, and because most of the guys, including the leader in the business, is likely to come out with their EV vehicle sometime next year. But I think the real important point that one has to keep in mind is that one of the company which has more than 50% market share on the PV side typically wants to do this in-house over a period of time. So effectively, the size of opportunity for a large amount of battery guys is going to be limited to the balance 50%. And that balance 50% is where the opportunity really lies. So the one who really goes live first really makes most of it, over a period of time.
Got it. Niket, two questions. One, what are some of the newer emerging themes that you're betting on? We spoke about a few. That is one. And second, are you adding newer, completely unknown names? I mean, unknown at Motilal. Are you adding newer names every month? I mean, we are seeing. I was talking about this a lot of on the sell side. New initiations, right? It's not as if some of these stocks have not done very well. It's just that, I mean, formally now institutional coverage is beginning. It gives a stamp of whatever, respectability, if you want to call it. But the stocks were doing well in any case, even without coverage. But it allows, I think, institutions to come in. So I just wanted to get your sense there as well. Are you adding newer names every month? Yeah, go on.
Well, not every month, but we definitely don't want the portfolio to remain static. If you have a static portfolio, then obviously it underperforms over a period of time. So you have to play the cycles very well. But I think the newer theme, that the point that you articulated, I think one big theme that we believe is going to play out for the next 5 years is this whole Apple ecosystem in India. So if you look at Apple's export from India, has been $1 billion in April month, standalone month. Single month, India has exported $1 billion worth of Apple products. So on an annualized basis would be about $12 billion. We believe this $12 billion should move closer to $50 to $60 billion in the next 3 to 4 year period. Now, the whole ecosystem of this is something that we have really focused on. We have made investments in that direction. We believe it's going to be a 5 to 7x kind of a size of opportunity from current levels. And these are very initial days as far as this whole ecosystem is concerned. So till now, what we've generally seen is this whole mobile assembly in India. Now we believe the whole component ecosystem is going to go live in the next, hopefully next 1 year. And you will see a lot of government action in that direction, which government has been saying about PLI in mobile phone as well. So you should see that extending to component ecosystem, but we are specifically focusing right now to the whole Apple ecosystem, where we believe the size of opportunity is very, very large, and that could be the theme for the next 5 years. The second important theme is the whole export theme.
Sorry, just what kind of names there, Niket?
Well, I'm not allowed to mention names, but if you look at some of our portfolios, you will see, some of our portfolios being much more readier in that direction on the small cap side, as well as on the mid cap side.
Okay, export opportunity?
Second, I think, is like export opportunity. So I think we clearly believe that, in the next 12 to 18 months, I think IT will make a big comeback. It actually has been an underperforming sector on the large cap side, not so much on the mid cap side. But we believe, with Telecom that we did last year, we believe in the current year, we should see a comeback of IT, which should go all the way to the next year, December month. We believe AI is now a reality, and you should see increased traction from AI coming up. So I think if you take a higher growth rate in IT, then the valuations are much more reasonable. So at a time where within the mid cap and small cap space, valuation is a concern, but there are sectors and spaces where valuation is still much more reasonable. So we have taken about a 10% overweight position right now on the IT side as such.
Okay, it was a pleasure speaking to you, to both of you actually. Thank you so much for joining us on the show, both Shreyas and Niket. Very helpful over there. For the market, just wanted to take one quick look before we proceed. Not bad actually. The Nifty is holding with gains of about 50 odd points. The Midcap index is where all the action is at. So the party is right there, 230 points higher on the Midcap index. But let's now focus on Shriram Finance. The company is selling stake in their housing finance business to Warburg Pincus. This stake sale will happen for 4,630 crores. Y.S. Chakravarti, who is the MD and CEO of Shriram City Union Finance, is joining us now. Mr. Chakravarti, good morning and thanks a lot for joining in. How much will your capital adequacy ratio strengthen by, sir, with this stake sale of Shriram Housing to Warburg Pincus?
See, it's not a significant addition, but yeah, it will be, I think, up by about between 1 to 1.5%.
Okay, 1 to 1.5% is how much the capital adequacy ratio will go up by, is it?
Yeah.
Okay. Can you tell us what is the outlook as far as the business is concerned? I mean, are you seeing any signs of pain at all in the rural markets? Because, you know, we have seen a lot of MFIs have talked about how asset quality is worsening. We've seen the NPAs go up as well. Wanted your thoughts on how things could shape up over the next 12 to 18 months?
No, as of now, we don't see any strain, very honestly, because see, our basic rural business is our two-wheeler business, our gold loan business, and small business loans. I'm not seeing any stress in these lines as of now. And even on the transportation sector, I think things are going well. Last 2 months were good. April, there was some slowdown. Typically, you know, beginning of the year, kind of a slight slowdown, but May has been good. And June so far is performing well.
But in the last conversation, you indicated that election is slowing things down a bit in terms of demand. But you're saying only the month of April was subdued. May and June has been on track. Can you give some numbers? What were the disbursements like in April, May, and even, you know, most of June?
So I would say this quarter, I mean, year on year, the quarter would be better. I'll not be able to give you the specific numbers as of now, but as of today, we are ahead of last year's numbers. So both of collections as well as disbursements, we were slightly ahead of last year's first quarter. So the elections, we were actually a little apprehensive that it will slow down, but compared to last year, it was actually slightly better.
Yeah. You know, your AUM growth guidance is 15%, Mr. Chakravarti. Morning, Prashant here.
Yeah, morning.
You've in the past highlighted that there could be some upside risk. You'll see, you'll revise it as you go along, if needed, that is. Are we at that stage?
I wouldn't call it as an upside risk. I would say there is an upside potential.
A potential, sorry, yes.
So, yeah. We will do that probably post second quarter.
Post second quarter, but it could be higher.
Possible. Possible.
Okay. You want to sort of quantify? I mean, you have visibility, right? I mean, how things are going. I mean, I'm not asking for a number. Yeah.
Yeah, I know. See, we are slightly, as I told you, we are slightly ahead of the last quarter as of today. So, if you are able to hold this here, the third and fourth quarter should give us a good growth number.
Yeah, no, got it. Now, just one point, this is not sort of really about Shriram Finance in that sense, but about the industry. We've seen, you know, over the weekend, for example, you had this farm loan waiver which was announced in Telangana, right? You know, we are hearing murmurs in other states as well that something could happen. There are state elections, etc., also around the corner. What does it do to sort of overall credit quality in that sense, Mr. Chakravarti? And is there any sort of at the margin kind of impact for a business like yours?
No, because again, the farm loan waiver was also limited to basically on the number of acres that a farmer holds and the loan amount. So it's basically, it will definitely benefit the marginal farmers. I don't see an impact on our margins or business per se. It should actually put a little more money into the hands of the marginal farmers. So which should be okay good for the rural economy.
Okay. So, earlier when we started, you mentioned that your capital adequacy ratio would strengthen a tad bit, but I didn't get the exact number. The CRAR, what will it strengthen to, if you could tell me, over the next 1 year?
Probably we see. I think right now we are around 20%. So it will go to about 21 and a half.
21 and a half. Okay, got it. I also wanted to know what's happening with the commercial vehicle side of the business, because the entire sector is, seeing a bit of a decline. The OEMs are not very confident of even single-digit growth, perhaps in FY25. I want to understand, how do you see CV financing growing in FY25?
So let me put this way. So specifically on the CV side, the construction side, it's still there is a demand there on the construction side, like tippers and construction equipment. The demand is still there, and in certain states we expect the demand to actually go up. For example, a state like Andhra Pradesh, they are actually focusing a lot on now on the infra. Probably states like that, we will see an uptick in demand. And consequently, the used vehicles also, market also, we should grow. So I would say it's a mixed bag. The MHCVs have slowed down. LCV, there is a little slowdown on the LCV side also. But on the used market, there is a robust demand on the used vehicle market. Basically because of the cost of the new vehicles have gone up, so there is a good demand for used vehicles. Again, supply side, yes, even in the used vehicle segment, there is a slight constraint on the supply side because the replacement cycles have gotten longer, where people were replacing between 3 to 5 years. Today, it's going to 5 to 6 years now. The replacement cycle has slightly gone up. So the supply is also a little down in the used vehicle market.
No, I mean, would you give it a push? Would you give the CV segment a bit of a push by sort of changing LTV or product sort of loan tenures, etc.? Or no, not really?
LTVs, no, definitely no. We want to have a great margin there, but see, it's not a question of LTV. Again, supply itself is limited supply, so you need to actually I would put it this way. So since supply is low, you need to actually hold on to your customers and make sure that in the replacement market, the customer you don't lose your customer.
Okay. No, I meant help. I meant to push in that segment. So CVs slightly slower, right? As opposed to some of the other segments. What about MSMEs and gold? I mean, those two have been sort of big drivers for you. How is that shaping up?
Both are doing well. In fact, these are the two focus products for us since our merger, and we have MSME loans, because both gold and MSME, because of the addition of the commercial vehicle branches to the network, we were able to increase the point of presence there. So we will continue to push both of them.
Sir, you've been in conversation with rating agencies also, pushing for perhaps an upgrade. Now with the divestment done, your capital ratios picking up by more than 100 basis points. Where have the conversations been with rating agencies? Are we likely to see an upgrade, or what's holding them back?
It's an ongoing dialogue, and I mean, what's holding them back is something that they have to answer, because we've been pushing and we feel that we are the right candidate. We have proved that the merger has worked and the merger is producing results. I mean, we are doing all we can, so now it's in the hands of the rating agencies only.
I know you said that you've not seen stress in the rural economy as of now, but some of the peers are talking about it, particularly on the MFI side. There was one small finance bank which went ahead and increased the credit cost, the guidance also, the amount that the credit cost would be. Your guidance is about 2%. Are you still maintaining it, or is there a risk to that?
No, we are still maintaining it. We are pretty confident that we will be able to hold it there.
Okay, and on margins? On NIMs, what's the outlook?
NIMs also, as per guidance, we'll be holding it. I mean, we don't see as of today, we don't see any decline in our lending rates, and the margins are holding up. See, I'll put it this way again. Probably, since we have a basket of products, there could be a slight decline in the margins in, say, a commercial vehicle, but that will be made up in a two-wheeler, a gold, or an MSME. So it's basically a mix of, since we have a mix of products, so we are able to, manage that.
All right, got that. Thank you very much for joining us, sir. Appreciate you sort of taking out the time, being with us here on CNBC TV18, and good luck to you. So very, very steady growth. 15% AUM growth is the guidance for the medium term. But as Mr. Chakravarti said, it could be an upside there, but we'd only know after the second quarter numbers sort of come through. They'll be able to sort of quantify that if there is an upside. We'll take a quick commercial break here. We'll come back. We'll connect with Pankaj Kumar, Vice President Research at Kotak Securities. We put the spotlight on real estate and what's happening there. Stay tuned.
Well, let's get the spotlight on the realty sector now. According to Kotak Securities, residential real estate sector has scaled to new highs in FY24, touching a lifetime high of 1.1 billion square feet. To discuss more on this sector, Pankaj Kumar, Vice President Research at Kotak Securities, joins in. Pankaj, thanks a lot for joining in. You don't need all of this data to tell you the kind of boom in the real estate space, right? Just one look outside in Mumbai and you realize, with the kind of skyscrapers that are hitting the streets. But tell me a little bit more about the numbers. What are the numbers now in the residential real estate space compared to what it was a year ago? And how sustainable do you think these numbers are?
Good morning, Sonia. So as you rightly pointed out, there's a boom in the real estate sector that we have seen. And FY24 numbers, if you look at overall for the sector, has grown at 20% on a YOY basis. And it is roughly 1.1 billion square feet. Even for the larger players, if you see the listed companies, they have grown well. Most of the large companies has grown at even more than 20%. And for the guidance, if you see FY25 guidance as such, most of these companies are guiding for double-digit growth in pre-sales. So demand continues to remain strong. There are multiple factors. If you look at the industry, it's consolidating, and that theme is continuing. And if you look at the inventory, so inventory in the system is still 1.3x of trailing 12-month pre-sales. So that's also on the lower side. And the launch pipeline for most of these companies continues to remain strong. So we continue to see healthy volume growth as well as the value growth in the coming year.
What's been the price increase that we've seen so far in Q1, April to June? And if you could just break it up, market, at least geographically.
So if you look at the volume price increase, that's been healthy. In fact, for FY24, it's 11% price increase that we have seen. But price increase is largely driven by your inflation as well as some minor increase in the prices that we see. So it's not that substantially high, but there's a demand that's continuing, and moderate price increase is supporting that.
Okay. So this lifetime high, All India residential sales lifetime high 1.1 billion square feet. Going forward, can you just break it up for us into geographies? Where do you see the maximum traction coming from now in terms of residential sales over the next, say, 12 to 18 months?
So if you look at the listed players that who are guiding for a very strong growth, say 20%, most of these companies are located in the large metros particularly. And we have seen the South-based, Bangalore-based companies or even Mumbai-based companies are guiding for a healthy growth of 20% plus kind of numbers in FY25. NCR, to some extent, we have seen 15% kind of growth, what the DLF has guided. So you can get a sense like how the year looks like.
How are the valuations of the companies that you track? How does it compare with, say, a 3-year average or a 5-year average? And where is it that you're most comfortable in terms of valuation?
So, as you rightly pointed, the valuations for these most of the listed companies currently is in a range of 7 to 12 times on a forward EV to EBITDA on a pre-sales number on FY26 estimates. So, 3 years ago, these numbers were on the lower side, say 4 to 6x. So that has come up in the higher band now. So that shows that there is optimism, of course, and the numbers are also supporting because the growth rates that we were estimating 3 years back were not that what we are estimating now. Even the companies are launching to that extent and selling also. So the valuation is itself reflects the growth that we are estimating.
Is there a risk of oversupply in any of the micro markets? Because there's been so much construction activity happening. We see that in Mumbai, particularly in this whole lower Parel area. So, is there a risk of oversupply and could that dampen price increases? You spoke about 11% price hike last year.
So, in terms of overall supply, if you see, of course, there is a supply, but there's a demand which is matching that. Because if you look at the overall inventory in the system, so even for the Mumbai market, it's not that high that we have seen 3-4 years back or even the previous cycle. So it's still in a less than 2 years kind of that's a sales numbers that inventory numbers that we are having as of now. So we are still seeing a good demand. Inventory is not high in the system, and there is a stable price increase as well. So that is supporting that demand.
Okay, we'll leave it at that. Thank you so much for joining us and taking us through the realty sector and what you see as the way forward. The market is quiet. A little bit of a positive bias is what we're seeing right now. Mitesh Thakkar is joining in. Mitesh, hi. Welcome back to the show. 23,600 thereabouts is where the market is consolidating at. Do you think this could be the order of the day? What are the stocks that you're looking at right now for the rest of the day?
So, Sonia, 23,600 is the actually breakout point for the short-term traders. Last 2-3 days, we've seen hourly pivots being formed over there. And today we got an intraday high of 23,620, but failed to sustain above that. So once we get an hourly close above this today's high, I think we could see some momentum ticket. Till then, I think, hold your horses. On the stock side, though, I have a buy on Navin Fluorine with a stop below 36.45 for a target of around 3,800. Then maybe we can look at even higher levels over there. And a sell on Aurobindo Pharma with a stop just about 12.31 and a target of 11.60 on the long side.
Mitesh, in the PSU space, I mean, you already have recommendations live?
In the PSU space, Prashant, we are now looking at situations wherein most of these stocks like BHEL, Coal India, BEL, etc., going through more of a pullback and a sideways consolidation. So from a trading point of view, next 3-4 days, I would avoid PSUs. I don't think there's any significant directional movement happening.
Okay, yeah. I mean, yesterday we saw some pullbacks, right? SAIL, Concor, the fertilizer names, of course, etc. as well. Credit access, any thoughts here, Mitesh?
I'm not tracking that stock, sorry.
Okay, all right. Stock sold off about 4-5% yesterday. And it's, of course, the top tier sort of microfinance player out there. So 1,400 there on credit access. Quiet. I mean, actually, the index is pretty quiet, but at a broader sort of broader market level, there is enough activity, which I think is very much underway right now. Mitesh, we'll talk again a little later. We'll take a quick commercial break here. Manisha is going to be here. We put the focus on commodities. Stay tuned.
And that's what we're seeing happen with Nvidia becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now Nvidia is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast Nvidia is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI, and if you haven't got a good AI strategy, well, implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you know, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
Okay, well, the market is slowing down. It's not doing too much at all, really, to be honest. It's just that a couple of these stocks like Zomato are in the news. Then you have, of course, these battery manufacturers that are big. You know, some of the CV makers, Ashok Leyland is at a fresh 52-week high, so that's looking good. And private sector banks coming back in action. So ICICI Bank, by the way, is at a fresh 52-week high as we speak. But let's go across to Manisha Gupta to get a quick update on what's happening in the world of commodities. Manisha, over to you.
Thank you for that, Sonia. Well, the month of June hasn't gone down well for metals as a sector. April and May were amazing, but June clearly seems to have wiped off much of the gains that the month of May put out for you. So the strength in US dollar is one of the reasons for that to happen. And then every data that you saw come out of China has been on the weaker side, especially the property numbers have been all on weaker side there. If you look at the numbers there, the new home prices in 70 Chinese cities declined by 4%. And this is the lowest number that you've seen on board come in since 2015. Also, when you look at the investment numbers and the home prices, home sales as well, all of that data has been on the weaker side. There has been a 34% decline in annual sales from 100 construction companies there. So every number, as I said, that you look has been on the weaker side. The construction activity and the investment numbers in sense of property have continued to slip as well. You know, earlier it was about heat waves and not just India, but various other Asian countries were looking at that as well. And then now there are heavy rains happening in various areas. So the construction activity clearly is looking at a stalling effect from various places. And that has been putting pressure onto the markets. So when you look at the steel prices, we're looking at a 2-month lows onto this one, trading below 3,400 yuan per ton. Not just steel, iron ore prices are trading at a 2.5-month lows. You have copper prices, which have continued to decline as well. That one is trading at a 2-month lows at 4.4. All-time high has been 5.2. And on LME, the copper prices, after hitting an all-time high of 11,100 in the month of May, are trading between $9,500 to $9,700 a ton. So base metals, ferrous metals, non-ferrous metals, all of that have seen some weakness. The only area that we've seen some support come in has been the zinc and lead prices. But that is also because the surplus in these commodities seems to be going off. But as and when you will see markets looking at inventories increasing, you could be looking at some pressure increasing here as well. I want to show you on what the metals have done in the matter of the month of June. And as you can see, almost everything has seen a decline. Starting right from copper, which has fallen by 8%, you have a 5% decline in steel, 9 to 8% cut coming in for iron ore and lead as well. And it's a similar story when you look at other metals like zinc and aluminum. Nickel clearly has been an underperformer with nearly 15% of a decline coming in. But all of these metals and other asset classes will watch out for the US inflation data that comes in on Friday.
Okay, thanks a lot for that. Well, we're watching out for a stock like Craftsman Auto as well. The stock is up in trade today. It signed an MOU with Sunbeam Lightweighting Solutions and Kedara Capital Fund. They are looking to acquire either the whole or part of the business of Sunbeam in one or more tranches. So there is an acquisition that they are looking at the moment. The transaction excludes certain assets in Gurugram, but there are no further details given on the timeline of or the consideration that they will pay for this particular acquisition. Now remember, Craftsman Automation is a manufacturer of automobile parts. They produce gears, heavy parts, sheet metal equipment, special purpose machines, etc. Since its listing in March of 2021, the shares of Craftsman Auto have risen 250% from their IPO price. The IPO price was $14.90 per share. Today, the stock is at $5,200. So it's been a huge up move. And on the back of this potential acquisition that the company might do, the stock is up almost about 8.5%. So big moves coming in over there. But Happiest Minds is what you're tracking?
Yes, because there's a large block deal of 1.27 crore shares. That's 8.3% equity, which is totally valued at 1,076 crore rupees. This is slightly more than what, in the morning, what we had picked up is it's going to be a 6% block deal. But it turns out it's been an 8.3% block deal. The average price is at about 847. The stock is currently hovering there. So it's an 8% fall compared to where it closed yesterday. Now, sources suggest that the promoter, Ashok Soota, has sold his stake. His stake was about 50.1% as of March. And with this, it will decline by close to about 8%. In the past also, Mr. Ashok Soota has sold stake in the company. In September of 2023, he had sold a 1.1% stake to raise funds for his other ventures. But at that time, the communication shared by him to the company and to us is that his stake will not drop below 40% in a way to quell, any kind of, worries that the promoter stake sale will keep coming. But he had indicated that at least till 40% he may go. And we've seen a very large block deal today, which has put pressure on Happiest Minds. So the stock is, being weighed down under that. But broadly today, IT is also on the back foot. HCL Tech is now the top Nifty loser. It's a cut of nearly about 1%. LTI Mindtree is weak in trade. TCS is a fall of nearly about 0.5%. So IT is, on the back foot, even as banks are picking up some of that slack, with the Nifty Bank now up close to about 300 odd points.
Okay, well, let's do one thing. Let's take a quick break on the other side. Our special segment, it's the economy. Lata will get chatting with Anubhuti Sahai of Standard Chartered Bank and Aditi Nair, the chief economist at ICRA, to discuss the India's current account surplus. Stay tuned.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts. And the reality is that it was the government's case is misguided. And so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it a trust deficit. as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our term.
Welcome to It's the Economy. It's a magnificent set of numbers that we are going to analyze today. For the first time in 11 quarters, India has posted a current account surplus. Now, we must absorb the significance of what this means. About 33 years ago, India had only enough dollars to pay for 3 weeks of oil imports. That's when the IMF threatened to make India a defaulter and the great liberalization was ushered in. Even 11 years ago, in 2013, Indian rupee was classified as one of the fragile 5. Why? Because the year before, we had a current account deficit of about 5.2% of GDP. So the rupee has always been under pressure because we import much more than we export. But this year, or rather in the quarter Jan-March 2024, we have reported a current account surplus. Now, what has generated this huge difference is our improvement in our services exports. Software services, only software services have risen by about 9% to $142 billion. There is a new category called business process exports. That's largely this, the non-software part of the GCCs, the global captive centers. That has generated inflow of $29 billion. That's a 40% jump over the year ago number. And then there are Indians living abroad and sending money in. The Indian diaspora has expanded, so has the remittances. And we have a huge $106 billion or $105 billion coming on account of this. That explains the current account surplus. But current account surplus also means that India is sending savings abroad. A deficit means investments flow in. A surplus means India is exporting its domestic savings. So is a huge surplus very good? How do we balance the two? What can it mean on the rupee? Are all questions that are thrown up. Too much of a good thing is also bad. For all these questions, I'm joined by two economists, Anubhuti Sahai, the head of South Asia Economic Research at Standard Chartered Bank, and Aditi Nair, the chief economist at ICRA Ratings. Ladies, thank you very much. It's a great set of data to discuss, and I'm glad that we three women are discussing it. First to you, Aditi. The first question really is, does this start a period of very stable current account for India? There were times when we used to have a 3% deficit and it used to keep the rupee jittery. Is that period completely over?
Thanks, Lata. Well, certainly this is a really good set of numbers, better than what we were expecting. We had penciled in a small surplus and this has exceeded our expectations. One thing I would like to say is that it's possibly going to be transient. We are expecting the current account to revert back into very modest deficits from Q1 onward. So nothing to worry about. In fact, the size of the deficits is likely to be quite limited, 1 to 1.2% of GDP for FY25 as a whole. So overall, we do think that the current account situation is going to be a big part of the macro stability that we're envisioning for India going forward. I would say that, with the current account deficit, we do tend to see a lot of seasonality. So between one quarter and the next, the trends do tend to change quite a lot. So surplus in one quarter is not indicative of surplus going ahead. We do think we're going to slip back into a deficit of around 1.5% of GDP in the current quarter. The trade deficit for April-May has been fairly, a fair bit larger than what we saw in April-May of last year. That's partly on commodity prices being higher in this period as compared to the year-ago level. So while we are expecting this surplus to be transient, overall, we feel that the current account situation is very, very comfortable and is going to be a big part of India's macro stability going forward.
Okay. No, I take your point that fourth quarter is seasonal. Our exports normally do well because people are meeting deadlines, meeting targets, and we historically have been stronger in the fourth quarter. But Anubhuti, the same question to you, slightly tweaked. Yes, even the full year is a deficit actually, but it's only a deficit of 0.7%. That also is a historic low. We have normally averaged 2.5–3%. Can we at least say that going forward, India on a stable, sustainable basis will post a current account deficit at best of 1%, not more?
Yes, Lata, what you're pointing out is a very important structural change, which we can clearly call out for. So current account deficit, as you very rightly mentioned, used to be wide and extremely vulnerable to higher crude oil prices. With doubling of services exports, we have clearly seen a structural change in current account deficit story. And if I just break it down, just to give us a sense on how much financing requirements are there on an annual basis, effectively, our goods trade deficit gets completely funded by our services trade deficit and remittances. What is left to be funded is simply the payment which we have to make in terms of investments made in the debt segment or the equity segment. So, all the royalties, interest payments, dividends, etc. So that is the only portion which needs to be funded. So I would, definitely, make this point strongly that the current account story has clearly seen a structural change, and from, a thumb rule of where it is said that 2% of current account deficit is sustainable, probably, it will require oil prices to be extremely high to go to that level. Closer to 1% is the more likely scenario which we will see over next few years.
Okay. Well, actually, I know that Reserve Bank governors have in the past shared that for them, it was a Lakshman Rekha not to cross 2.5%, because over 2.5% current account deficit to GDP, the pressures felt on the currency. But clearly at 1%, it becomes a non-problem going forward, as both of you ladies say. But Anubhuti, what about the rupee? Today itself, obviously, there isn't much movement because this is Jan-March data that we are getting, and that is priced in. But does this make for a stronger rupee going forward? What are your levels?
So in terms of our forecast, Lata, we are calling for 80 to 70 by end of 2024. So a little bit of strength coming from the current levels. Having said that, in India, current account deficit is a story which will persist. So any appreciation in our view is primarily driven by a temporary phase of, say, dollar weakness. We do not expect rupee to remain on a stronger footing on a medium-term basis. So I think if I have to draw a parallel to what happened in the last decade vis-a-vis what we expect this decade, if it was an expectation that rupee would depreciate by 2.5 to 3% on an annual basis, I think that range has clearly shifted lower by 100 basis points because of the structural change in the current account deficit story. Okay. So near term, by end of December, we might see a temporary period of rupee appreciation, primarily driven by dollar weakness when Fed starts cutting rate. But as we are a twin deficit economy, highly vulnerable to commodity prices, the depreciation pressure will remain, but it will be at a much slower pace than what we saw in the last decade.
That's a big headline. If we were normally experiencing a 3 to 4% currency depreciation per year, and if that falls by 1 percentage point or falls to 1%, that's a significant change in terms of our risk-taking ability, our rating, etc. Aditi, would you agree, one, that we are in for a much slower depreciation, and two, will the Reserve Bank be the counterweight? You don't want an appreciation or a slower depreciation. You want a depreciation to beat the Chinese depreciation, to retain the advantage of the domestic economy, not getting flooded by cheap Chinese imports. So, two questions, track of the rupee and whether Reserve Bank will prevent the slower depreciation.
So, Lata, I'll offer you a few thoughts on these topics. First of all, as far as the rupee is concerned, in many periods, we haven't seen this average depreciation taking place every year. We've seen a movement in a narrow range, so a modest sort of a tendency to mildly depreciate. And then some event happens, either domestic or external, and you see a large step change coming through in the rupee. So firstly, this average, steady depreciation is something that we haven't seen in a long period of time. So step changes, what will trigger the next step change? I think that is something that, maybe it will be geopolitics in the current context, not necessarily a domestic reason that could lead to a step change in the rupee dollar exchange rate. Secondly, I mean, if we look at our inflation differentials, certainly those now hopefully are going to be much narrower than what they've been in the past. So that supports what Anubhuti is saying as well, that even if we look at an average depreciation over a much longer period of time, it should be narrower than what we've been used to in the past, simply because inflation differentials should be much lower with the advanced economies than what we've had to deal with in the past. I would imagine that the RBI possibly will prefer to look at a more stable rupee. So, not too much appreciation and not too much depreciation. That's what we're expecting over the next few months.
Okay. Well, a current account deficit, current account surplus represents domestic savings going out. That's not healthy at our stage of growth. We are still, 120th in terms of per capita income at about $2,600 per capita. So do you think, Aditi, that the policy will have to work very hard to ensure that we have enough imports and our industry is able to absorb it? Should it become one of the policy focus to ensure we don't have a current account surplus?
So I don't think the current account surplus is here to stay. And certainly what has led to this, great deal of comfort that we got in the last few quarters on the current account side has been the inflows coming in from the services trade surplus, a lot of which is benefiting from the GCCs. And GCCs not only the earning us for an income, they're also creating a lot of jobs. So I think policy focus should be to support GCCs and make sure they flourish, because they help us with our jobs question as well.
Anubhuti, what's your take? Would you say that since we have an impending surplus, or at least balance, not really surplus, should policy work very hard to ensure that we are able to absorb more imports? This is the best time we have under the sun, when the demographic dividend is kicking in, when tax to GDP is rising. Should there be a bigger effort to import more and ensure our industry is able to absorb it?
I mean, Lata, I think if we look at the whole focus of the government's policy, it is primarily focused on boosting the manufacturing sector. So when the push is to increase the medium-term growth prospects, I think an increase in imports will automatically happen. Not because the government wants the imports to be high, it's just because the government is focused on boosting the medium-term potential. There will be counters to it, which can keep our current account deficit story on a more stable footing, or at a level which doesn't put our macro stability under risk. The counter, as Aditi was pointing out, one is the services exports. I mean, India has clearly established itself in terms of GCC capability. And the other part is on FDI. I think this is one point which probably we are missing out when we are focused on the lot of positive news around the current account deficit story, is FDI has been slowing. If you look at the past 5 years, the first 3 years, the net FDI flow was closer to $40 billion. Then it came to $30 billion, and we are now down to $10 billion on net FDI for FY24. Current account deficit to FDI is a very, very important metric when you are looking at macro stability and also when you're looking at rupee stability. If the current account deficit gets fully funded by FDI, that provides a lot of comfort to the central bank, that the reliance on less durable flows, that is portfolio investment, is not very high. Right now, I think even if we are at a $23-25 billion of current account deficit, it's giving us a lot of comfort. The FDI flows are not there. And our view is that probably when the interest rates globally move lower, this can emerge as a counter. Even if the current account deficit widens to some extent on increased imports, we can see some counter coming from the increased FDI inflows over a year and a half away from here onwards.
Absolutely, Anubhuti. I think that's a brilliant point, and we were actually flashing that data as well. One of the points I was making in terms of India not able to absorb imports, India's growth is wanting when the opportunity is coming knocking, is proven also by the fact that we have not been able to attract as much FDI as we should be in our stage of growth. As you pointed out, FDI this FY24 is 1/3 of what it was the year before, when it was $28 billion. So just a final point, Aditi, would you say that we are moving to a structurally different situation where the current account deficit may be there, but it will no longer be a binding constraint?
I do think so. I think we're in for an extended period where the current account deficit is going to, at worst, be 1.5 to 2% of GDP. Yeah. And that also only if commodity prices skyrocket, perhaps because of geopolitical or other issues. I don't think the global growth outlook is going to be supportive of commodity prices being so high on a sustained basis that we get into a current account deficit at those levels. So I do think that structurally we're in for a very, comfortable period as far as our current account deficit is concerned.
All right. Ladies, thank you very much. There is, of course, the other big event that is upon us. On Friday, India enters the GBI EM bond index, and that will mean a regular flow of at least 2 billion into the Indian market by way of capital investments. So this is going to be a very important and a very liberating period in terms of India's external account, very far from the fragile 5 that we were just 11 years ago. So on that celebratory note, thank you very much, Anubhuti and Aditi. That's it on this edition of It's the Economy. Thanks for watching. Chartbusters carry on.
I think there were some questions, and legally everybody who looked at that understood that, the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or at least support.
You're watching us here on Chartbusters. It's Amara Raja, which is among the biggest gainers in today's trading session. Brokerages are bullish on the stock as the company has signed an agreement to go ahead and do a partnership with regards to lithium-ion batteries.
Happiest Minds slumps after a number of block deals where 8.5% equity changes hands. Sources tell CNBC-TV18 that promoter Ashok Soota is likely to have sold his stake.
Bandhan Bank trades with losses after the RBI appoints an additional director to oversee the management transition. Brokerage firm Macquarie gives the stock an outperform rating, citing better long-term prospects.
Borosil rallies after sources say that the company has launched a 150 crore rupee QIP. All Cargo Gati also trades higher after sources indicate that it has launched a 100 crore rupee QIP.
And Hindustan Copper and Hindustan Aeronautics both surge in trade after exiting the F&O ban list. Good morning. You're watching us here on Chartbusters on CNBC TV18. I'm Mangalam Malu. With me, as always, Hormaz Fatakia. We're seeing a good day of trade in, the frontline indices. It's the Nifty Bank, which is the star of the show so far. We have the Nifty just under that 23,600 mark. The Nifty Bank up 0.75%, a fresh record high on that index as well. The Midcap index in line with the way the Nifty has been moving around. What's interesting is that from yesterday's low, we've seen a recovery on the Nifty, but the Nifty has been facing some sort of supply around that 23,600, 650 mark. So let's see whether we test the upper end of the range in today's trading session or not. Hi, Hormaz. Good morning.
Morning, Mangalam. It's a good morning indeed if you are a bull, and the Nifty is also made a new, not a new high, but it crossed 23,600 on an intraday basis. It's still trading around those levels, around 23,590. 23,664 is the record high that you need to watch out for. But the star of the show has been the Nifty Bank, as Mangalam was highlighting. It was the star of the show last week as well. That 3.5% surge that the index had last week was the best that it had seen on all of 2024. So good going for the Nifty Bank, now comfortably above the mark of 52,000. Broader markets doing well as well. The small cap index is up 0.8%. The mid cap index also is flat but is trading with a positive bias. So overall, a good start for the trading day.
Overall, a good start for the trading day. So that's about the secondary markets. Let's talk about the primary market then. Liquor company, Allied Blenders and Distillers, as you know it as ABD. IPO opens today for subscription. It's a 1,500 crore IPO, 1,000 crore fresh issue. And the IPO dates, of course, on your screen. We have the issue price as well between, the IPO price band between 267 to 281 rupees. We're joined now in our studios by the MD of the company, Alok Gupta, and Ramkrishnan Ramaswamy, who is the CFO. Thanks a lot, gentlemen, for joining in, and welcome to the stock market itself. The first question, 1,000 crore fresh issue. You have a debt of roughly around 800 crores as per your red herring prospectus. So if you could tell us, how much of that gets paid down immediately? What will be your annual savings in finance costs?
Well, thank you so much for inviting us. The objective of the issue is to pay off our entire debt. Therefore, of the 1,000 crore proceed, the entire debt will get paid off. That has a significant reduction in our interest cost, and therefore leaves sort of internal accruals to be able to put in as growth capital.
So roughly closer, what would your cost of finance be?
Well, our cost of finance is about, since we have declared numbers only up to December, it's about 150 odd crores.
150 odd crores, you annualize it to about 180, 200 odd crores. So 200 crores of finance cost gets wiped out, and we see, profitability increase to the tune of about 150 crores if you account for the tax as well.
Well, I think there'll be a significant reduction. So for now, I would say that it'll be more than 50%.
Okay.
Because it still has some working capital, but over a period of time, on back of our internal accruals, we see a consistent reduction in our interest cost.
Right, so let's get to business then. Since you mentioned you're going to reduce debt from most parts of the proceeds that you're going to have, what is the kind of volume CAGR that you're anticipating over the next 3 years when it comes to the business overall? Has there been a target that you have set?
We're looking at mid double digits, a combination of growing at a single digit in our mass premium segment, but more profitable markets. But it's the P&A, the prestige and above, and the premium and luxury segment where bulk of the growth is being targeted.
Can you describe the mix between the two as of now?
Well, as of now, it's, let's say, in terms of value, about 50-50, but we expect it to change significantly with every year focus being on the P&A and the premium luxury segment.
One of the threats is that while you are among the top 3 players in the country when it comes to IMFL, the top 2 players are large, and those competitors are, large with a lot of reserves behind them and a lot of might behind them as well. So in light of that, what is your strategy for market share going forward? You have about 20.9% in the segment that you currently cater at. What's your long-term target for market share here?
I think the big change in trend as far as the Indian market is concerned is the consumer. The consumer is sort of now looking at product with authentic story, looking at great quality, and it is quite evident across sectors that I want to consume better. I'm happy to pay for Indian brands even equal or better than a sort of a global brand. So I think for us at ABD, it's about figuring out that key customer insight that allows us to position a brand and to be able to sort of engage the customer better. So I think that really is the way we'd like to position ABD, which is more as a challenger brand and catching the tailwind of what's happening on the consumer side of the story.
Mr. Ramaswamy, I had to ask you about your capacity utilization for the first 9 months of FY24 stood at around 63%. Do you plan to take that higher, and are there any further Capex plans that you have outlined for the company going forward?
So we are at 67%, that's what we are operating at. And for the bottling capacity, 70% capacity utilization is supposed to be pretty good and prudent. So we have a headroom there. And as far as the distillery is concerned, we are at 100% capacity. There is a good chance we may get into backward integration on a future date because we are catering only to currently 30% of our own in-house consumption. So there is a good chance we will have to look at backward integration and increase the capacity of the distilleries.
Is there any Capex lined up for the future?
Well, we have plans of putting 2 distilleries, but it's still in thought stage, and we will look at it at the right time.
Right. One of the things that stands out in your numbers is that your margins are between 7 to 8% over the last 3.5 years, the period that you've reported in your red herring prospectus. And this compares with something like a United Spirits at 18%, Radico Khaitan at 12%. You are speaking about the premiumization trend. So do you have a ballpark in which you would like your margins to go double digits by when to start with, and then maybe low teens, etc.?
Absolutely. I think the sort of medium-term outlook is to get at a peer parity EBITDA. I think there are 2 key drivers, and we sort of covered both of them during our conversation. So first, let me bring in what Ramki was saying is that we are considering getting into a backward integration. Currently, if 100 liters of ENA is what we consume, 30 liters is what we produce, and 70 is what we buy. The idea is to get to 100% captive ENA, and that increases our gross margin by almost 200 to 300 basis points. So that's a big jump in terms of where we are today. And second is on back of a higher share of value coming from both P&A and premium and luxury. We expect gross margin expansion of another 200 to 300% basis point. So when you put these 2 together and look at what our exit is, we are sort of close to where our peers are. So that's really what the game plan is.
2-part question on that one.
Sure.
When does all of this come to fruition? Do you have a timeline to that? And secondly, what does your product mix look like then at that level?
Right. So I think I would say a 3-year is a reasonable horizon to get there. Right. We will see a big jump in the immediate year, which is the current year. And thereafter, the captive ENA facility might take between 18 months to 2 years. So I would say over a 3-year period, we should be in the peer parity EBITDA. On the question of what does our brand mix look like, if we look at our portfolio currently, we have Officer's Choice, which is a mass premium player. A very, very important point, because this is the price point at which consumers get into the world of brands, right? So they will do about 20 million cases. Our P&A whiskey segment, we have 3 millennial brands. We have Officer's Choice Blue, which is an extension of Officer's Choice, does nearly 4 million cases. In 2018, we had launched a brand called Sterling Reserve, which is a semi-premium brand. Again, does about 5 million cases. And Iconic White, which we launched in November 22, went on to do its million cases in the first 13 months. We did about 2.2 million cases last financial year. And in Q4 of last financial year, we were exiting at an ARR of 3 million cases. So these 3 brands put together gives us a very comprehensive portfolio to play in a 120 million P&A whiskey segment. Just moving on to the premium and luxury side, which is really at a price point 1,500 rupees all the way to 15,000. What we've done is that we have carefully chosen about 4 to 5 flavor price point where we believe we have both right to play and right to win. And these 4 to 5 flavor price point will be both whiskey and non-whiskey.
Any updates on the MRP revision in Telangana? There have been reports of that coming in, of the price revisions there. Have you heard of that on an official basis?
We have not heard of any price revision so far. Our expectation is, going by the last 10-year historical, that the price increase should be next financial year.
Right. And final question then, when you're talking about 3 years down the line in industry parity margins, which would be somewhere around mid-teens, if one was to assume that, what would the top line look like at that point with all these things that you're talking about, the number of cases increasing, premiumization and all of that?
Well, we should be looking at a top line of between 5,500 crores plus minus NSV level, not at gross level. Yes.
Perfect. Thank you so much for joining in, and we wish you good luck for the IPO. We'll see you when the stock lists, and that time we'll press you a little more.
Thank you so much. Much appreciate your time.
All right. So with that, it is the conversation that we had with the management of ABD. The important part, the two headlines that we got, they are looking at margins going to mid-teens in the next 3 years with about 5,500 crores on the top line. And also with the funds that they get from the IPO, they're looking to pare their debt. So savings of almost 150 crores coming in on finance costs as well. Take a short break, come back. We'll focus on a lot of individual stocks which are buzzing around today.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. Yeah. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League, cricket here. And, I'm part of the San Francisco Unicorn team. And so it's fun.
So the Hyderabad Mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, I mean, rather than, in this case, the mafia. This is all about a passion, and cricket's a global sport. And actually, the funny thing about sport just brings together people like no other activity. And, just the amount of excitement. But now we have to go win it all, right? I mean, we've just got to the, Super 8s. And unfortunately, the India-Australia match, I have a board meeting on that day. So it's going to be...
Big conflict.
No, the board meeting is going to take priority. But, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to investing.
Well, while we were having that conversation with the management of ABD, an important event took place in the break, which is Afghanistan won the game against Bangladesh. So last night, Hormaz and I were cheering for our men in blue, where we knocked Australia out. And this morning, we're again cheering for our men in blue, which is the Afghanistan team, largely because, with Afghanistan winning against Bangladesh, it effectively knocks Australia out of the World Cup. What a wonderful feeling. November 19th, I still remember the pain, Hormaz.
Like that pain is something that generations will remember. At least our generation would remember for sure. But hopefully, now that the Indian team has progressed to the semi-finals and so has Afghanistan, with Australia being out, hopefully the Indian team could put those ghosts to rest for good.
Let's see whether we put those ghosts to rest for good or not. But, there has definitely been a lot of balm which has been applied by Rohit Sharma. There's Jasprit Bumrah's performance yesterday, and also with Afghanistan winning and Australia going out of the World Cup. But that's enough about cricket and a lot of happiness out there. The market continues to hold on just a little under 23,600 for the Nifty. The Nifty Bank's actually doing well. So let's get in Shilpa Raut of Prabhudas Leeladhar for a quick technical check. Shilpa, yesterday we tested the lower end of the range. Today we're moving towards the higher end of the range. Do you think there is a breakout in sight?
Good morning, Mangalam and Hormuz, and thank you for having me on the show. Today, yes, we see that Nifty Bank is definitely breaking out above 52,000 right now, and HDFC Bank, ICICI Bank, and Axis, all the big boys are participating. So I believe there's a very strong trade for Bank Nifty, and today being the Nifty expiry, also there could be a play in that. So definitely going long for both the indices, I believe is I mean that is how it should be done today. Bank Nifty, you can look for targets of 52,350 to 52,500, and like with Nifty, in that case, can do 23,650 to 23,700.
Right. What about specific stocks then, Shilpa? Is there anything on your radar?
Yes, I have one sell and one buy. The sell would be on Oberoi Realty. The sector is witnessing some sort of profit booking, and the sector has also seen a very massive rally. So I believe that. Oberoi Realty is a little weak as long as it is sustaining below 1900, and it can do very well towards 1830 to 1800 zones. So I have recommended the same sell in Prabhudas Leeladhar today as well. And so for people, if anybody wants to trade in options, I have recommended 1800 and put it a little out of the money, but the liquidity factor for July series is a little widespread. So 1800 put for July series can also be bought into. And the other one would be a buy in Marico. Marico playing little defensive. It is giving a breakout now. The futures is trading at around 625 in July. So that can be a good buy for targets of 640 to 645. Keep a stop loss of 615.
Interesting. And the stock of the day that I wanted to highlight, Shilpa, is Amara Raja, and that stock has been on a tear ever since it announced that technology licensing agreement last evening, and the stock is up almost 19%. It's trading at a record high. Blue sky zone there, Shilpa. Are there any levels that you're tracking on the stock now?
Amara Raja, our technical desk has also recommended quite some time, and the stock definitely, heading towards 1780 to 1800 zones positionally from here. So, buying on declines, anywhere you get a dip for that positional target can be definitely looked upon.
All right. And what about InfoEdge and Coforge? Both of these stocks are actually, picking pace right now. InfoEdge was something that moved well in yesterday's trading session as well. Now currently off lows and has moved to the high point of trade. Do you have a call here?
If you look at, Naukri, yes, Naukri definitely is looking, much stronger. And you can definitely expect the stock to move towards 6,800 to 7,000 zones. So on declines also, if you find stock anywhere in between 6,600 to 6,500, I believe that is also a good accumulating zone, and for targets of 7,000 for sure.
All right, Shilpa, thanks a lot for joining in, sharing with us your views on the index and specific stocks as well. Shilpa out there of Prabhudas Leeladhar. And moving on now to our special segment where we get you a few ideas for profit from Money Control Pro. Nitin Agarwal of moneycontrol.com joins us now to talk about a stock that he's tracking very closely.
The company that I have chosen for today is Craftsman Automation, which is an auto ancillary company. There are multiple factors that make us upbeat about the company. First, the significant growth achieved by the aluminium segment. In the final quarter of FY24, the company registered a robust year-on-year growth of around 27.8% in its revenue, and the growth was bolstered by the significant operating leverage, which led to an EBITDA margin expansion of around 300 basis points for that particular segment. The management is confident about the pickup in the aluminium segment, driven by the wider adoption of electric vehicle and aluminium-related products, which make the vehicle very, very light. Secondly, the powertrain business. The powertrain business comprises of commercial vehicle and the construction equipment, has been struggling primarily in terms of growth, primarily because of the high base of last year. However, the management is very confident about the government's focus on infrastructure, construction, mining activity, which will eventually lead to the growth in the powertrain business. Finally, the industrial and the industrial segment and engineering segment, which has been doing significantly well in the quarter for FY24. The growth in this particular segment was muted primarily because of the election-related halt in the economic activity that was there. However, with the same government in the center, the management has indicated that the growth in this segment is expected to be very, very high, given the government's policy towards the industrial and engineering infrastructure. In terms of valuation, the company currently trades at around 19.5 times FY26 projected earnings, which we believe is very reasonable for a company like Craftsman Automation.
At the day's high is Craftsman Automation, and that is also on the back of some news flow that came in last evening. The MOU that it had signed to acquire some parts of Sunbeam's businesses in one or more tranches, excluding certain assets that are based out of Gurugram. So extending gains now is Craftsman Automation, now 10.5% higher, almost at 53.50 is the stock, and it's still a slight distance away from its record high, which is around 55.13. So that 5513 is the level for Craftsman Automation, post which it will be at a new record high. But mind you, Craftsman Automation made its stock market debut in 2021 at an IPO price of 1490. Since then, the stock is up 250%. But time for a short break here on Chartbusters. We get you more on the markets and specific stocks on the other side. Stay tuned.
Global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicine.
Back with us here on Chartbusters, pull up Zomato, and that stock is also trading with gains in today's trading session. It is very close to a record high now. 202 is where Zomato is, and Mangalam, what a journey for Zomato as well. 5x now from that all-time low of 40 rupees, and brokerages continue to remain gung-ho.
Brokerages continue to remain gung-ho. You know, yesterday Process reported released its annual report, and the key headline was them having written their valuation of Byju's down to zero. But beneath the surface, remember, Process also has investments in Swiggy, so they keep releasing data from what Swiggy was doing as well, and as a result of which people are now comparing that with Zomato, also because Swiggy is IPO bound. So that is something we'll keep an eye out on. What Zomato is doing in the last 1 year or the last couple of years is gaining market share as against Swiggy in the food delivery space and improving operating performance, along with improving their reach in the Q-commerce space as well. Brokerages are taking note of that. CLSA has a buy call with a target price of 248 rupees. They're saying that Swiggy's overall gross order value grew 26% in the last financial year versus 36% for Zomato. Remember, Zomato's last financial year numbers are already known, but now we're comparing that with Swiggy. Overall revenue for Swiggy grew about 24%, lower than Zomato's adjusted revenue growth of almost 56%. And while Swiggy's operating performance is improving, their trading losses narrowed to about $158 million in EBITDA losses. Actually, Zomato made an EBITDA positive gain in FY24 of $5 million. Goldman Sachs too says that Zomato's market share is now 56-57%, which is a near 200 basis points expansion versus the previous period. And in quick commerce as well, Zomato's scale is actually 50% higher than that of its nearest competitor, which is Swiggy Instamart itself. The adjusted EBITDA for Swiggy, the loss, while it's narrowing, still remains meaningfully higher versus Zomato. They too are buyers of the stock, and as is UBS, which has a buy rating and a target price of 250. So stock doing well, brokerages liking that stock. There are reasons for valuation upgrade coming in because of quick commerce, and amidst all of this, operational performance improving along with them gaining market share. It's what do you call it? The perfect scenario, the Goldilocks scenario.
Perfect scenario indeed, and things just seem to be falling in place, right, for Zomato. And what a turnaround for Blinkit as well, right? Because at one point Blinkit was possibly the biggest bone of contention for the company. Now Goldman Sachs is valuing Blinkit more than the core business itself. So good going
and
there.
This at a time when someone like a Zepto is valued at around $3.6 billion itself. So it will be very interesting to see whether going forward quick commerce also will be a two-horse race or a one-horse race itself. Because here, first to the consumer is the one that typically the belief is will make the most amount of inroads and make the most amount of money as well out here. channel supremacy, establishing channel supremacy is extremely crucial, and that's what Zomato has done with Blinkit.
From the fittest will survive, I guess here the fastest would survive is the norm, but good going for Zomato as well. They're almost 2% higher, well above the mark of 200. Pull up some other stocks as well that are doing well in today's session. Pull up Raymond, that stock is up 7%, and that has seen a very sharp gain as well, and it's trading very close to its highs, now almost at 2620, almost 2800 now is Raymond, 7% higher there. And a couple of other electric bus related stocks, Olectra, Greentech and JBM Auto also doing well in today's session. But with that, it's a wrap on this edition of Chartbusters. From Mangalam, me and the team that put this show together, thank you so much for watching. Trading Hour takes the action forward.
"25 years of excellence and unparalleled growth."
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. You know, this is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar, with me Sonia Shenoy, and it's 23,600 on the ticker for the Nifty. It's a third of a percentage point gain on the Sensex, and it's been powered by the banks. Friday was last week was a big week for the banking index. The Nifty Bank rallied close to about 3.5%. But yesterday, it took a bit of a pause. And today, once again, banks are firing away. The Nifty Bank now has a gain of about 450 points. And if you pull up the contribution plate, a chunk of the gains are courtesy individual stocks like an HDFC Bank. It started the day very, very flat, but HDFC Bank is now up close to about 1.5%. And that's about 50% of the gains today are on account of HDFC Bank standalone.
Absolutely. And what a day, right? I mean, so far going really well for the bulls and no complaints at all. 23,600 is here. And as you said, I mean, it's the bank Nifty that's really packing in the punch, not just today, but if you pull up a 1 week or, like a fortnight chart of the Nifty Bank, in the last 14 days, the Nifty Bank has gained about 5% and really has contributed to a lot of the gains that we've seen in the last many days. But let's do one thing. Let's get straight to individual stocks and how they're doing. At this point in time, one of the big stocks in focus is Amara Raja Batteries. So we're going to get straight to that. 20% higher almost on Amara Raja Batteries. In fact, not just Amara, but it's also Exide, which is doing pretty well. So 18% higher. In case you're wondering why Amara is surging, now the company has signed a technology licensing pact with a Slovakian company called GIB. That GIB is Gotian Inobat batteries. What's important here is that this technological collaboration is for manufacturing of lithium-ion cell batteries. And we do know the lithium-ion cells are used in a lot of, new age technology, whether it's electric cars, electric vehicles. But specifically, Amara Raja is working on advanced applications like electric aviation as well. And that is perhaps something that, could be a re-rating for the company. Now, Amara recently also upped its stake in the Slovakian lithium battery tech company to 9.3%. They invested 20 million euros for that additional 9.3% stake. And Amara is going big in this new technology space. So they have invested 9,500 crores in Telangana for advanced research and innovation. But let's not forget the stock is up 80% in the past 6 months. And, if you look at what the valuations, both for Amara and Exide, both are sitting at, fresh highs at this point in time. Amara is now trading at 23 times forward, while Exide is trading at 31 times. So these stocks are not cheap from any angle. But if you look at what individual brokerages are saying, most brokerages are quite bullish. Investec has a buy with a target price of 12.50. JP Morgan has a neutral with a target price of 12.10 on Amara batteries, which is well below the current market price. So the stock has surged a lot since then. JP Morgan says the company is taking the right steps. They are confident on the company's ability to progress towards a 16 gigawatt capacity target. And Investec says that this particular technological collaboration enhances Amara Raja's capabilities in transitioning to lithium-ion cell manufacturing. So this is really the big growth area for these battery companies.
But there is a contra view coming in from Kotak, and Kotak has a sell call on Amara Raja, and I'm just reading what they had to say in their note today. They're saying that most of the OEMs have already tied up with battery suppliers. So Hyundai Kia Motors has signed an MOU with Exide. Tata Motors has said they will be, procuring their cells from Agratas. M&M has inked a pact with Volkswagen and BYD for the supply of their batteries. Maruti Suzuki is going to procure batteries from TDSG. So they do acknowledge that OEMs will require multiple suppliers. They will not rely only on one supplier, which is where, companies like Amara Raja will kick in, but that will take some time. It's only once you achieve a particular scale, and therefore they believe the profitability and return ratio of lithium-ion battery will remain under pressure on account of the higher capex requirement. But I think that point about valuations, I think you said 23 times for an Amara and 31 times for Exide. So Amara is at about a 25% discount to its peers, Exide, and that is aiding it. But let's talk about Happiest Minds, because on the way down, it's Happiest Minds, which is under pressure. The key reason is we've seen a very large block deal of more than 8% equity. 1.27 crore shares, that's 8.3% equity, which is about 1,076 crore, has changed hands in a block deal today at an average price of 847. Now, in the morning, we had picked up that, Ashok Soota, who is the promoter of the company, is going to be selling stake, but we learned that he's going to be selling close to about a 6% stake. His holding in the company was about 50.1%. Now, we don't know why he's selling, but in the past, in September of 2023, Mr. Soota had sold about a 1.1% stake in Happiest Minds, and at that time, it was to raise funds for his other ventures. And he had also communicated that his stake will not fall below 40%. But it's a large block that we've seen more than 1,000 crores, so which is why it's putting pressure on the stock today.
Okay, Bandhan Bank is the other stock under pressure. If you're wondering why, Abhishek joins in to give us all the details. Abhishek, over to you.
Well, Sonia, Bandhan Bank, RBI has appointed an additional director on the board. Now, RBI has appointed Arun Kumar Singh, the retired RBI CGM, as the additional director. This is perhaps the fourth or fifth time that you are seeing such instance from RBI coming in. It came in for Yes Bank, came in for RBL Bank, Dhanlakshmi Bank, as well as now Bandhan Bank. Macquarie has written on Bandhan Bank outperformance rating with a target price of 240 per share. They say that RBI director on board, is it good or bad? The good or longer term perspective, near term the stock price could be under pressure. This is an interim measure that has been taken by RBI to ensure proper functioning of the bank, and issue in case of Bandhan, in their view, there hasn't been any internal candidate who has served the bank for a longer time at the board level or is eligible to the post of MD and CEO of the bank. So while the market may fear that there could be skeletons in the closet in terms of further increase in the stress pool, they believe that this is more a prudent measure that has been taken by RBI for Bandhan Bank. Back to you.
Okay, thanks a lot for that. Well, Craftsman Auto is the other stock that we're looking at. It's got a big gain going for itself today. It surged, I think the last time I checked, it was up almost 10%. Yes, 12% right now. It signed an MOU with the companies Sunbeam Lightweighting Solutions and Kedara Capital Fund to acquire either whole or part of the business of Sunbeam in one or more tranches. Now, this transaction excludes certain assets in Gurugram, but there are no further details on either the timeline or the consideration that the company will be paying for the acquisition. But Craftsman Auto is one stock that has done phenomenally well if you look at the last last year since it listed actually. It's in manufacture of automobile parts. It's known for producing gears, heavy parts, sheet metal equipments, etc. And since its listing in March of 2021, the shares have risen 250% from the IPO price. The IPO price was 1490. The stock is at 5410. So the fact that it is on track to make an acquisition is something that the street likes. And of course, this is a stock that has been doing very well. So further traction seen in Craftsman Auto this morning.
Okay, let's slip into a break on that note. On the other side, we'll discuss what's buzzing in commodities. Manisha Gupta will join in as always.
Of tailwinds that we have from good employment rates, good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be in certain ways self-funding, at least for now.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt the measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month.
Well, for now, the Midcap index has just moved a tad bit into the red. Nothing alarming, but little bit of profit taking is what you're seeing there. Otherwise, the Sensex and the Nifty are doing fine, just about 50 points higher for the Nifty. Let's get some quick action going in the commodity space. Manisha Gupta is joining in to give us the latest on what's happening there. Manisha, over to you.
Thank you for that, Sonia. Well, I'm looking at the crude oil prices where after 2 months of decline, the month of June really seems to be doing quite well. Pardon me. And we're looking at 5.5 to 6% of gains for both of these crude varieties. Well, the strength in US dollar is weighing onto the markets, but it also is about the long positions that the speculators really seem to be creating. Various Wall Street banks and brokerages have said that the third quarter could be looking at higher demand and some deficit could be being created in the world markets there. There also is a premium from the geopolitical concerns right now. There are Israel troops which are advancing further into Gaza. The Ukraine drone attacks on various Russian oil facilities have also added some premium. It also is about Petrokudar declaring a force majeure on a couple of its projects there, and then ban on procuring Russian gas by Europe is another reason that you have seen prices continue to gain up. There have been various reports suggesting that until the prices hold 85 for Brent and 81 for WTI, you could be looking at further longs continuing into this space. All of these markets, though, will watch out for the US inflation data that comes on Friday.
Thank you very much for that. Now, moving on to India's macros. India has posted a current account surplus in the Jan to March quarter, the first time in more than 10 quarters. To talk more about this, Lata will be joining in, but this will happen after a very short commercial break, so stay with us.
Condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible a lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now
Welcome back. Just a shade below 23,600. We touched it about some time back, but the markets have slipped in the last 10 minutes. The Midcap index is now in the red. It wasn't the green, but it's lost about 0.8% from the session highs. And the sell-off has accelerated in the last few minutes. Pull up something like a Jubilant FoodWorks, and you would see the picture there. The stock has been slipping. But let's now get to India's macros, because as promised, Lata is now joining in to talk about India's current account surplus, and it's a surplus, Lata, for the first time in 10 quarters. What led to it, and what's the outlook?
Yeah, first, what has led, why it is a bit historic. We've always had a current account deficit as a burden on the economy. In 1991, it led us to, possibly defaulting on IMF loan and collateralizing our gold for that. In 2013, we were called one of the fragile five. So if all those huge deficits are now replaced by a minor surplus, then that becomes very important. It's a surplus of 0.6% for the fourth quarter. For the full year, it's a deficit FY24, but it's a minor deficit, 0.7% is neither here nor there. It's almost a balance. So what caused it? It's primarily the big growth in India's services exports, mostly software exports. They've been doing well. They're doing even better now. So that's a 9% growth in services exports to $142 billion. On the back of this, there's also something called the business process exports that's growing. Those are the GCCs, the global captive centers, which are not software, the non-software global captive centers where, accounts, all the middle office work, accounts, compliance, risk, tax, payrolls, etc., are processed in India for Western economies and developed country companies. So that has grown by about 40%, albeit on a small base. The other big positive is the Indian diaspora, Indians living abroad and remitting money. Now it's over 100 billion getting remitted every year, 105 billion to be precise in FY24 itself, 5% higher year on year, but quarter on quarter it's 15% up. So just look at the pace at which that's growing. The other reason why the current account surplus is good is that the goods deficit, import-export difference, has narrowed. Actually, last year, both imports and exports fell, minus 5.3 for imports and minus 3.3 for exports. This is largely price-driven, because in 22, prices had shot up for all commodities due to the Ukraine war, and therefore this is not a volume-led fall as much as a price-led fall. But the important take-home over here is that imports are falling. At a time when India could easily pay for imports, Indian industry was not able to absorb so much imports. We need to grow faster because now we have the wherewithal. So you could count that as a bit of a negative. The other negative is the FDI flows. FDI flows in FY24 is 1/3 of what it was in FY23. Again, representing that, you may be a great investment opportunity, but the world is not yet waking up to it. What does a current account surplus basically mean? It means we have exported our surplus. At a time when domestic industry has yet to pick up, when we have a long way to go in terms of the growth story, you'd rather not have that surplus, but have a minor deficit so that investments flow into India and not the other way around. So to that extent, current account surplus clearly signifies that the external constraint, the deficit, the twin deficit that we used to speak about, one of them is well and truly over. It's for us to make it and to use the opportunity of the surplus in terms of higher imports and higher capex.
Okay, thanks Lata for that. Lata spoke to Standard Chartered Bank's Anubhuti Sahai and Aditi Nayyar of ICRA to understand their views on the current account surplus. Listen in.
Current account deficit, as you very rightly mentioned, used to be wide and extremely vulnerable to higher crude oil prices. With doubling of services exports, we have clearly seen a structural change in current account deficit story. We are calling for 80 to 70 by end of 2024. So a little bit of strength coming from the current levels. Current account deficit to FDI is a very, very important metric when you are looking at macro stability and also when you're looking at rupee stability. If the current account deficit gets fully funded by FDI, that provides a lot of comfort to the central bank.
I think we're in for an extended period where the current account deficit is going to, at worst, be 1.5 to 2% of GDP. And that also only if commodity prices skyrocket, perhaps because of geopolitical or other issues. I don't think the global growth outlook is going to be supportive of commodity prices being so high on a sustained basis that we get into a current account deficit at those levels. So I do think that structurally we're in for a very, comfortable period as far as our current account deficit is concerned.
Okay, thanks. Well, that is the word on the macros of the market. But let's get back to the micros, right? Mitesh Thakkar joins in for a quick technical check of the market. Mitesh, the going is good, but, like we were saying, it's ambling around these levels. Little bit of the markets have actually come off their highs and mid-caps are now in the red as well. How are you feeling about that? What's the strategy for the rest of the day?
So, I think, this level of 23,600 is coming across as an important pivot, and we still aren't able to cross it. So in that sense, slightly, tentative. I would want to see some good breakout happen, and then the market should show momentum once we start getting past 23,600. But till then, waiting it out. For the timing, I have one buy and one sell call. DLF is something which is weak, so recommend selling here with the stop at about 840. Look for a 790, 785 kind of a price target which the stock can hit on the downside. While on the upside, I would want to recommend buy on Shriram Finance. It's already rallied, but it is quiet. So Shriram Finance is a buy with the tight stop at 28.45 for targets of 29.40.
Any thoughts, Mitesh, on the Nifty Bank? New highs above 52,000. HDFC Bank continues to power on. Axis Bank is looking up. State Bank of India is also now inching higher. Any thoughts on the Nifty Bank and the big movers there?
Yeah, I think between the two indices is the Nifty Bank, and actually it's also lending strength to the Nifty. It's the Nifty Bank which is looking clearly strong to me. HDFC Bank, very interestingly poised. The highest closing, which the stock has had in the last few years is on daily basis 1697 on the 29th of December, and then we had 1716 on the 4th of July 23. So I think we are now there at this level of 1700, 1720, which is where the earlier highs were made. The pattern is quite positive. Maybe even if it takes a 1-2 day kind of a pause, once we start getting past 1720, I'm looking at an 1850 kind of a target. So very, very positive here. In fact, that is one index which could do well in a market which might be slightly sideways.
Okay, thanks a lot, Mitesh, for that. Let's step into a quick break. On the other side, we'll focus on stocks that are buzzing on the back of brokerage calls. We'll be back.
Structure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at Nvidia today. Yes. And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with Nvidia becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in 93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now Nvidia is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast Nvidia is growing, and it is growing.
Welcome back to Trading Hour on CNBC-TV18. Well, Zomato gains on the back of positive notes from brokerages. Mangalam joins in with the details. Mangalam, over to you.
Well, Zomato has been gaining for a while right now, and another reason for the stock to be gaining is, the process annual report that was released yesterday, and that gave some insight into what Swiggy was doing as well. Now, Zomato's FY24 numbers are in public domain as it's a listed company. Swiggy, which is IPO bound, had some insight. We got some insight into their FY24 numbers basis process annual report, and as a result of which brokerages have written on it. What it basically says is that even as Swiggy's operating performance is improving, they're still in losses. Zomato's performance is improving a lot more, and secondly, Zomato's revenue growth as well as all the other factors are doing a lot better than Swiggy itself. So CLSA, for instance, has a buy rating target price of 248. They say that Swiggy's overall gross order value grew at around 26%. Zomato's own business grew at about 36%, and Swiggy's trading losses reduced to about $158 million, while Zomato is making an EBITDA profit of almost $5 million. Swiggy's overall revenue as well grew a lot lower than Zomato's, upwards of 55%. And that is something that has been coined and that has been looked at by other brokerages as well. We got a view coming in from Goldman Sachs as well. They're positive. Remember, they recently valued Blinkit higher than Zomato's food delivery business itself, and they said that Zomato has been gaining a fair amount of market share, over 200 basis points over the last 1 year. And in scale, quick commerce for Zomato's business is 50% higher than its nearest competitor, which is Instamart, and as a result of which they are doing a lot better operationally as well, even though Swiggy's losses are narrowing. And finally, we have UBS's view as well. They have a target price closer to 250 rupees. So brokerage is valuing Zomato anywhere between 240 to 250 rupees and doing even better because they're growing faster than Swiggy.
Thank you very much for that. Well explained. That's Zomato for you. HDFC Bank is higher in trade on the back of a positive note coming in from Bernstein. Abhishek joins in with the details. Abhishek.
Well, Rima, Bernstein has written on HDFC Bank. They have an outperformance rating with a target price of 2,100 per share. Now, they say that over the next 2 years, they expect HDFC Bank's ROA, that is return on asset, to improve by 30 to 40 basis points going ahead. So that will be led by the fact that there will be improvement with respect to the loan mix. That will tilt more towards a high yielding segment, and this could drive the ROA by 20 basis points. They also expect cost of funds to normalize going ahead, so they expect improvement in cost of funds by 18 basis points, which will drive 11 basis point improvement in the return on asset. They also expect operating leverage to kick in. So over the past few years, if you see, HDFC Bank has been on a branch expansion spree, and they expect that to normalize or come down going ahead, and that will also drive the ROA by 11 basis point as per their analysis. Back to you.
Thanks for that. Well, PVR Inox is in focus after Nuvama in its recent note said that they see a 40% upside in the company. Here's why. Vamakshi is here with the details. Vamakshi, over to you.
Well, absolutely. Nuvama has come out with a report on PVR Inox. They've reiterated their buy rating and given a target price of 1,995 per share, which when compared to the closing price yesterday implies a 40% upside. And the reasons are stated as follows. They are expecting the content to likely improve after 7 lackluster months. Strong collections are expected. Kalki 2898 AD is expected to garner almost 100 crores in box office collections on day one itself. Munjya is likely to clock almost 100 odd crores in the month of June as well. So the Bollywood pipeline, the Indian films pipeline looks quite strong going forward. But apart from that, the Hollywood content is also expected to pick up following the settlement of writers' strike in the last year. Deadpool and Wolverine are expected for a release on 26th of July. Transformers 1 is also lined up for the 20th September release, so definitely watch out for that. Apart from that, the ad revenues are also likely to pick up for PVR Inox, and the company itself is focusing on debt reduction as well as a Capex-like model. The priority for the company over the next couple of quarters is to be net debt-free, and in fact, they're targeting a reduction of almost 20% in annual capital expenditure through FOCO, that is franchisee owned and company operated model, and they're also partnering with a couple of developers. So overall, a good outlook is what Nuvama expects from PVR Inox, and as a result, they're quite bullish on the counter.
Thank you very much for that. Though, as she said, the April-May block collections have been on the weaker side due to elections and cricket, etc. But things are picking up from here on in terms of the pipeline and expectations. Get into a break. On the other side, we'll discuss market fundamentals. Ashi Anand of IME Capital joins in next.
$140% in the last 2 years. Today, if you're not into AI and if you haven't got a good AI strategy well in implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you know, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, you know, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription. We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, you know, it's something that we will address, but we certainly believe that we have been flexible. You know, we offer customer choice and we're completely transparent about this. You know, when you subscribe to the plan, it says annual.
Welcome back. The other big event which is upon us right now are the telecom spectrum auctions. What's on offer? 96,300 crore worth of spectrum spread across various bands: 800, 900, 1800, 21, 2300, 2500, 3300 and 26 gigahertz across 8 frequency bands. Now, companies prior to the spectrum auction give a deposit of an earnest money, which, you know, is an indication of how much they're willing to bid. So 3,000 crore has been deposited by Reliance Jio, 1,050 by Bharti Airtel. Vodafone Idea is the least at 300 crores. The way to read this is that EMD multiplied by 12 times, a factor of 12, is the maximum amount telecom companies are willing to bid. Now, if you just do the math based on that, the expectation from the street is that this, you know, spectrum auction is likely to be fairly muted in its bidding, limited bidding, because the EMD deposited by the telcos is almost 80% lower compared to what we had in the prior auction, 2022, and the numbers are up for you on your screen. So Reliance Jio has deposited 3,000 crore this time. In 2022, the 5G auctions, they had deposited 14,000 crore rupees. Bharti Airtel this time has deposited 1,050 crore, which compares with 5,500 crore deposited in the prior auction. For Vodafone Idea also, you know, 2,200 crore was deposited previously, and now it's just at about, you know, 300 rupees. According to Jefferies, the total bid amount this time may be the lowest that we've seen since 2014. Now, why is it expected to be muted? Because the last auction was the big 5G auction, where telecom companies purchased a spectrum for their 5G rollout. Now, 5G related spectrum auction has been purchased, rollout has been completed. Therefore, there is no big need for that, at least till 5G monetizes and things pick up on that front. So right now, the focus by the telcos could be on renewal of spectrum where the licenses are expiring. Now, Jio has put in the most, 3,000 crore. It can bid for a maximum of 36,000 crore rupees. It has no spectrum which is coming up for renewal. Bharti Airtel has some spectrum coming up for renewal. If it decides to only bid for that, then according to analysts, its outlay will be about 3,800 crore rupees. But according to some analysts, it may look to purchase some sub-gigahertz spectrum, and therefore its overall outlay could be on the higher side. Vodafone Idea expect limited participation. We know it's just in the process of raising some money right now. In fact, they've even surrendered some of the spectrum which is coming up for renewal. So according to analysts, 1,000 to 1,200 crore is what the company may be looking for bidding. The auction started at 10 o'clock today, and we'll know the day-by-day progress soon enough. But let's focus on the markets now. We've got Ashi Anand from IME Capital joining in. Okay, let me invite Ashi. Thank you very much for joining in. I was just looking at your micro trends PMS portfolio, where the themes that you are focusing on is Capex revival. You've got a few lending franchises like ICICI Bank, Kotak Mahindra in the fray, financialization of savings. So you've got HDFC, AMC, 361, consumer and chemical names. Any changes that you've done in the last 3 months in your portfolio, in your core holdings, in your thought process and stocks?
So the portfolio has been largely kind of stable, as in the idea is that it is a longer-term portfolio focused on the slightly longer-term evolving themes in terms of micro trends. But I think the one core change that we have made is capital goods is a space which had done extremely well for us. So we have undertaken some amount of profit booking, and we've deployed that towards consumer. This is partly driven by the fact that monsoons have been decent. With the kind of election results, there is expected to be some kind of impetus towards social or consumption spends. And consumer as a category has been weak for the past few years. We're seeing some kind of a potential revival here. I think what we're also trying to do as part of this portfolio is ensure some level of a balance. What you saw last year is that all market performance was largely driven by a few specific sectors. This would be real estate, capital goods, railways, some amount of infra. Primarily the whole gross capital formation theme. I think that theme has run quite significantly. We're still very positive. We still continue to be overweight across these themes. But given the fact that valuations have moved up quite significantly, we are also trying to get in some amount of exposure to sectors like consumer, where we believe it is due for a catch-up. Another space that we are kind of looking at is IT. Our belief is that as we move towards the end of the year, and as interest rates start coming down globally and possibly greater signs of economic revival globally, IT is a kind of a theme that could emerge. So broadly, the portfolio remains largely kind of intact, but we are tweaking around based on how markets are evolving.
Okay. Ashi, hi. Thank you for joining us on the show. Appreciate your time here. I was going through some of your holdings, and you have a digital disruption PMS where one of your top holdings is Zomato. Almost 26% of the weightage is in Zomato. I understand where the excitement comes from because, this quick commerce space is growing by leaps and bounds. But do you think we've reached a slightly mature phase of this growth in quick commerce, or do you think it's just the start?
No, so I think quick commerce honestly is pretty much right at the start, right? If you go back just a year and a half, people were very concerned about Zomato's acquisition of Blinkit and potential risks that would come in terms of capital deployment into quick commerce. I think that bet has worked out very, very well for them. And what you have seen is both revenue growth as well as profitability on quick commerce, I think far outpacing definitely street expectations, but arguably even in terms of what the management was looking at. Quick commerce is still relatively nascent in India. So Zomato, which would be the leader, would have about 550 dark stores. There's still very large amount of areas within existing tier 1, tier 2 cities and the potential to go into smaller cities as well. It is a humongous opportunity. We're still in the first couple of years of this whole opportunity. You'd already see brokers like a Goldman, a Kotak, etc., starting to already attribute a higher valuation to quick commerce as compared to food delivery, just given the sheer size of the opportunity and the amount of spends. Spends on grocery would far outweigh kind of food spends in India, food delivery spends. So it is a very, very interesting opportunity. I think we're still in early days. And we continue to watch this closely, but we see this as a very, very interesting long-term value driver for Zomato. And just one important element, when we launched the digital disruption PMS, one core part of the thesis is that once a company has developed a strong network of users on their platform, the ability to add on incremental new lines of service can add to a lot of optionality value. You're seeing that on kind of Zomato with Blinkit. They've also recently now acquired Paytm's kind of movie ticketing business to strengthen their entire outdoor or events-oriented business. This ability to add on new streams of business is something very, very interesting, not just for Zomato, but across the entire digital platform space.
But there is some concern in this quick commerce about increasing competition. Now, Zepto has had a big fundraising round. DMart is looking to launch its own. Flipkart is in the process of, ramping up its, quick commerce. Do you see price wars, taking place, or deep discounting to continue to gain subscribers and the kind of growth? And is that a risk to Zomato, according to you?
So given how nascent you are in this industry, right, as in quick commerce would probably not represent even close to 1% of overall grocery spends. I think competition and a large amount of competition can only help expand the space, get people more and more used to being able to order groceries and various other essentials at the click of a button to immediately get that. So that change of behavior is something which is very important. And I think more competition really coming in will only help expand the space. So that's not something that we are overtly concerned about. Given the fact that quick commerce is a very locally driven market, it may not be necessary to have very aggressive discounting. So now the important part is we're still in early stages of this evolving business model. You will see competition come in, you will see market shares move around, you will possibly see some amount of discounting, etc., to get people entrenched onto a particular platform. But none of this is concerning from a longer term perspective. What you are very clearly seeing is consumers willing to pay a premium to get groceries delivered in 10 minutes, 15 minutes, etc. And once you change that consumer behavior, it throws open a very, very large opportunity and a very interesting business for these platforms. Now, one other key point is we believe that a Zomato or a Swiggy, so Zomato would have over 350,000 delivery partners on the ground who are working effectively for them, have an inherent competitive advantage of having this delivery partner network pre-existing. And it's a big advantage to them because food delivery partners are primarily used during lunch hours, dinner, or breakfast. They have a lot of free time in the day, and this can be leveraged on the quick commerce platform. So we kind of believe that a Zomato, Swiggy have a natural right to win in this opportunity, and which is why we continue to be very positive on the space.
Okay, that's very interesting actually, how you put it. The other, in this digital disruption space only, since it's very interesting, right, the whole space, I wanted your thoughts on some of these other platforms like, say, something like a Nykaa. Over there as well in the beauty space, there's so much competition. You have about almost 13.5% holding there. I want to understand how that space is evolving because now you've started, getting beauty products even on something like a Blinkit. I mean, so where does that leave the USP for someone like Nykaa? Just thinking aloud here.
Sure. Okay. So if I can, let me just answer this in a couple of ways, right? So the first is the overall digital platforms. What you are seeing is a larger value migration from traditional physical businesses towards online platforms. And this is a trend that we believe you're still in relatively early stages of. If you look at various underlying growth drivers, the way internet penetration has been shooting up over the last 3 or 4 years, it takes a certain amount of time for consumers to get more and more comfortable with digital spends. And this trend is something that we're actually only seeing accelerating going forward. If you go down another 5 or 10 years, the primary consumer class are going to be people who have been brought up with a digital ecosystem, with having used digital apps while they were in college, while they were in early schooling. All of this will drive penetration levels for digital platforms, according to us, to levels that a lot of people cannot really envisage at this point in time, and which is why, from an industry perspective, we believe this value migration towards digital platforms will actually sustain. Now, when it comes to someone like a Nykaa, if you really, and this is true for Nykaa. It's again true for a lot of other digital platforms. Online BPC penetration in India is still kind of sub 10%. And this is a space, BPC itself as a segment is growing quite rapidly. And the shift is happening towards online. You will have other competition which is coming in, but it is competition coming in into a large and a growing market. Nykaa, according to us, have some very clear rights to win. And this really comes around the whole mindshare that they managed to get with the consumer. Because, you know, if you're buying something on Nykaa, this is going to be authentic products. So you aren't going to get fakes, etc., which is a problem with a number of other more horizontal platforms like Amazon or Flipkart, etc. The other core element is this very large influencer network that Nykaa has been able to build. And if you're looking at how the consumer is shaping up, a lot of consumption demand is now being driven by influencers, what you're seeing on social media, what you're seeing in other digital platforms, etc. And I think Nykaa is very well ahead of this particular game. And which is where you're seeing, despite the competition, they're being able to quite comfortably grow their BPC business, which has matured at well above 20-25% growth rates. And they've indicated that that could continue for the next 4 to 5 years. This very strong growth, along with the shift to profitability, is what we find so interesting across digital platforms.
Shia, the entire digital disruption portfolio has played out very well for you. All these stocks have done well. You've got Zomato, Policy Bazaar, Nykaa, Naukri, Paytm, IndiaMart, Delivery, and so on. So clearly, you see upside in all these stocks, which is why it's there in your portfolio. But if you had to pick one stock, which in your portfolio, where you see a lot of upside from here on, which one would it be?
So that's difficult to answer. Honestly, we really see a lot of potential across all of these platforms, and there are very, very interesting stories in each of them. But what we probably believe to undoubtedly be the strongest franchise would be Zomato. And this is primarily linked to the fact that digital platforms derive their value from a network, and Zomato has a very, very difficult network to replicate. It's a three-sided platform. You have relationships with consumers, with restaurants, and with delivery partners. In order for any new participant to actually come in and shake this kind of a network is exceedingly difficult. So primarily linked to the core strength of the overall network, we find Zomato probably the purest play on the digital theme. But that said, we do see very similar things play out across other companies. Like PB Fintech, I think the level to which they entrench with insurers and the kind of ability for them to showcase the best offerings to customers, Nykaa's dominance in the BPC space, Paytm's potential longer-term value in terms of financializations of savings. There are very, very interesting themes across these companies, and we really see this as a decadal opportunity. What we really believe from a digital disruption perspective is what you saw between 2010 to 2020, where you saw tech companies in the US vastly outpace overall all other sectors and companies. We believe 2020 to 2030 is really going to be the period where you see digital platforms really emerge. And towards the end of the decade, we expect a lot of these companies to really be part of the core large cap indices.
Okay, Ashi, thanks a lot for joining in. Appreciate your time here. We will slip into a quick break on that note. As we do that, here's some good news we'd like to share with you. Money Control has further strengthened its position as India's premier business news platform, beating Economic Times across key metrics. According to ComScore data for the month of May, Money Control led with 41.8 million unique visitors. It has also maintained its massive lead in page views and time spent. We would like to take this opportunity to thank you, our viewers and readers, for reposing your faith in Money Control and Network 18.
And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me. And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other...
Welcome back to Trading Hour on CNBC-TV18. Have made investments in AI but remain cautious, says Mike Maples, the co-founding partner of Floodgate and co-author of Pattern Breakers. Why some startups change the future. In an exclusive chat with Shireen Bhan, he talks about the future of AI and the impact of Nvidia becoming the most valuable company in the world. Listen in.
Since we are talking about the future, and we're talking about a future which, in everyone's assessment is going to be driven now by generative AI, and it's sort of being made out to be the panacea that will transform the world, or it could, it could cause existential issues for sectors and for humanity itself. How are you looking at this from the startup world's perspective and from an entrepreneurial perspective?
Yeah, the main challenge we've seen with AI is, I think all of us know how empowering it is. I mean, all of us remember what it was like the first time we played with ChatGPT or created a picture with DALL-E. So I think that there's no question that the inflections are there and the empowerment. The challenge I've seen is who has the real insights. And so you see a lot of really great ideas, and I'll look at the product and I'll say, absolutely, I'd want to use that. Absolutely, I could see that people are going to want this. But then the harder question is, what is it about this that is not obvious? What is it about this that people are going to disagree with? And the problem is, if everybody agrees that it's a good idea, you don't end up doing as well because a whole bunch of companies simultaneously crowd the sector.
Yeah.
And so being non-consensus and right is what allows you to be unique and successful. And it turns out you have to have both. And so that's where we've made some investments, but we've been cautious because a lot of the companies have powerful inflections but lack the insight.
Well, speaking of impact, we're here in the Valley, and in a week where Nvidia is today the world's most valuable company. I mean, who would have thought that this would be possible at the start of 2024? The kind of, the explosion that we've seen as far as this company is concerned. I mean, do you believe that we're sitting on more stories like Nvidia that are just waiting to sort of have their moment, have their breakout moment?
I do. So I've only seen 2 sea changes in my life. There's lots of inflections, lots of changes, but like when I was a kid, mass computation, personal computer, Moore's law, the cost of computing declining to 0. And companies like Microsoft emerged in that wave. And then you had the era of mass connectivity. And rather than Moore's law and transistors, it was about how many nodes are on your network and do they connect. Now I think we're entering the era of mass cognition. And I think that cognition and cognitive functions are going to become commoditized in the way that network nodes and bandwidth were, or transistors were. And I just think that that's going to create the conditions for some massive companies. And we don't even know what they're going to be yet. It's like, it would have been like trying to figure out who the best companies on the internet would be in 1995. I mean, there were some signs of who they would be, but you know, there was a time when Intel was the most valuable chip company, more than all the other chip companies in the world combined, right? That's a long time ago.
Interesting conversation, and you can catch the full conversation at 7:30 and 9:30 p.m. today only on CNBC TV18. And with that, it's a wrap on Trading Hour. Stay tuned. Halftime Report is up next.
Friends brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, you know, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. You know, the Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, you know, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or at least supporting a friend's team.
And so it's a passion. And, you know, I don't know that we have enough of a farm system here, Shireen. I mean, you know, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, you know, whether it's Satya or me, you know, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League, you know, cricket here. And, you know, I'm part of the San Francisco Unicorn team. And so it's fun.
So the Hyderabad mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, you know, I mean, rather than, you know, in this case, the mafia, this is all about a passion, you know, and cricket's a global sport. And actually the funny thing about sport just brings together people like no other activity. And, you know, just the amount of excitement but now we have to go win it all, right? I mean, we've just got to the, you know, Super 8s. And unfortunately, the India-Australia match, I have a board meeting on that day. So it's going to be...
Big conflict.
No, the board meeting is going to take priority. But, you know, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI. Stocks trade firm and steady with a favorable advanced decline equation. Financials and industrials are prominent gainers, while realty and utility are the prominent drags.
The Happiest Minds stock slides after founder and chairperson Ashok Soota likely sells near 6% stake via block deals. The sale isn't out of sync with the founder's stated intent.
Amara Raja zooms on inking a licensing deal to make lithium-ion batteries with Slovakia's GIB EnergyX, while Craftsman Automation's MOU to acquire
most of Sunbeam lightweighters propels it higher.
And India posts a current account surplus for the January to March quarter of 2024 on strong services, exports and remittances, but capital flows were marred by a fall in foreign direct investment. The rupee is unmoved as data was on expected lines.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me today is Hormuz. Well, it's turning out to be a session, Hormuz, where we are seeing, largely consolidation for the frontline indices. So we have the Nifty, which is higher by around 50 odd points. We have the Sensex, which is up around 243 odd points. And the Bank Nifty, which is managing to outperform, so up around 0.7% currently for the Bank Nifty. What we can probably take away from the last couple of days is that the markets are probably focusing a lot more in terms of the July triggers, which would be the Q1 earnings as well as the budget. So I think the street will probably consolidate and, this is a phase post the elections and the next two triggers would be important to watch for. Lot of stocks in focus and that seems to be the big theme playing out, that stocks continue to be in focus on account of news. Amara Raja, Bandhan Bank, Zomato, HDFC Bank are just a couple to name a few. Hi, Hormuz.
Hi, Ekta. And as you mentioned, right, it's consolidation and that has been the trend almost all through this June series, but positive consolidation, if you can call it that, because the index is continuing to move higher despite it being in a range. The last time we saw a move of around 1% on either side on the index was on the 7th of June. So since then, it's been slightly range bound, but in a positive manner for the Nifty. 23,600 is where the index is, but the star of the session and the star of last week has been the Nifty Bank, and that continues to outperform even in today's trading session. Well above the mark of 52,000 is the index and at new record highs as well. It was outperforming last week as well, 3.5% higher. That was the best gain that the index saw in all of 2024. So good going for the Nifty Bank. You mentioned specific stocks, you mentioned Amara Raja, but there are a couple of electric bus related stocks that are doing well in today's session as well. Electra Green Tech is the one, around 6.5% higher for that stock as well. And JBM Auto at one point was up 5%. So that is also trading with healthy gains in today's session. So all in all, it's a good day, it's a day of consolidation for the markets, but stock specific action is the trend.
Yes, and the interest in these select mid caps does continue. So I think the retail investors just continue to put their focus there. But nonetheless, the advanced decline ratio is positive as well. So that's the other key point that stands out. Currently over 2,000 stocks advancing, 1,700 stocks declining on the Bombay Stock Exchange. But since we did speak about the financials, let's put the focus on Bandhan Bank as RBI has appointed an additional director on the board. What does this mean? Abhishek joins in to fill us in with the details.
Bandhan Bank has informed the exchanges that RBI has appointed an additional director on its board. Now, RBI has appointed Arun Kumar Singh, the retired RBI CGM, as an additional director on the board of Bandhan Bank. Now, this is perhaps an RBI taking precautions with respect to, CS Ghosh moving out of Bandhan Bank. And this is perhaps for the fourth or fifth time that RBI has had such instances. Earlier, they have done the same with Yes Bank, RBL Bank, Dhanlakshmi Bank as well, and now you are seeing that with Bandhan Bank. Macquarie has written on Bandhan Bank, they have an outperformance rating, target price of 240 per share. They say that RBI's director on board, is it good or is it bad? It's more good with respect to longer term outlook. However, in the shorter term, the stock price could be under pressure according to them. This is an interim measure taken by RBI to ensure that proper functioning is taking place at the bank, as and when the MD and CEO moves out. Issue in case of Bandhan Bank, in their view, is that there is not significant internal candidates who can replace the outgoing MD and CEO at the bank. So while the market may fear that there could be more skeletons in the closet in terms of further increase in the stress pool, they believe that this is more of a prudent measure that RBI has taken against Bandhan Bank. Back to you.
Interesting, Abhishek. Thanks a lot for that. But stay on, because HDFC Bank is also trading higher in today's session. That is on the back of a positive Bernstein note. Tell us more on that.
Well, Bernstein has written on HDFC Bank, they have an outperformance rating and a target price of 2,100 per share. Now, they expect ROA, that is written on asset of HDFC Bank, to improve in the near future, or let's say over the next 4 years, which will be driven by the fact that there will be a change in the loan mix. Loan mix will tilt more towards the higher yielding segment, and that could push the ROA by 20 basis points. There will be a cost of funds normalization. So going ahead, they expect 18 basis point improvement in cost of funds, which could drive ROA or return on asset by 11 basis point. In terms of cost optimization, now HDFC Bank has been on a branch expansion spree. They expect that to come down and cost to income ratio to improve. That could further drive the ROA by 11 basis point is what Bernstein has mentioned in their note today. Back to you.
Okay, all right, Abhishek, thanks very much for that. So those are a couple of these financials which are in focus today. Just want to point out that a couple of these pharmaceutical stocks from the broader markets are also showing some amount of traction on the upside. So case in point would be Wockhardt, which is up around 5% Newland Labs, which is up around 4.5% and Alchem, which is up around 4% as well. So all of these stocks are showing some amount of traction in today's trade. But the other one, now let's shift from the financials to the IT space. Happiest Minds is under pressure after a large block deal took place this morning. Rima is here to tell us why the street is negatively reacting to this piece of news and giving us the details as well.
Well, it's just a very large block, right? Supply which is hit. There was a block deal of about 8.3% equity or 1.27 crore share, amounting to 1,076 crore, which changed hands today at an average price of 847. In the morning, we had picked up that the promoter Ashok Soota is looking to sell about a 6% stake via a block deal, but the amount that's been transacted has been a little more than that, 8.3%. Now, Ashok Soota, the promoter of Happiest Minds, held a 50.1% stake in the company. He has sold stake in the past. In September of 2023, he had sold a 1.1% stake, and the reason cited is that he wanted to raise money for his other ventures. But he had said that he will not go down below 40%. That was his stated ambition. But today, the Happiest Mind stock is under pressure on account of the large block deal.
Stock is under pressure indeed. Rima, thanks a lot for that. 8% lower is Happiest Minds Technologies. Not a happy day whatsoever for the stock. But time for a short break here on Halftime Report. On the other side, we get you more on the markets and also put the focus on the current account surplus for the January to March quarter of 2024. Stay tuned. We'll be right back.
Two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com.
Back with us here on Halftime Report and to some macros now. And India has posted a current account surplus in the January to March quarter, the first after 10 quarters. Now, can this feat be repeated? Lata is here with her editor's take.
First, what has led, why it is a bit historic. We've always had a current account deficit as a burden on the economy. In 1991, it led us to, possibly defaulting on IMF loan and collateralizing our gold for that. In 2013, we were called one of the fragile five. So if all those huge deficits are now replaced by a minor surplus, then that becomes very important. It's a surplus of 0.6% for the fourth quarter. For the full year, it's a deficit FY24, but it's a minor deficit, 0.7% is neither here nor there. It's almost a balance. So what caused it? It's primarily the big growth in India's services exports, mostly software exports. They've been doing well. They're doing even better now. So that's a 9% growth in services exports to $142 billion. On the back of this, there's also something called the business process exports that's growing. Those are the GCCs, the global captive centers, which are not software, the non-software global captive centers where, accounts, all the middle office work, accounts, compliance, risk, tax, payrolls, etc. are processed in India for Western economies and developed country companies. So that has grown by about 40%, albeit on a small base. The other big positive is the Indian diaspora, Indians living abroad and remitting money. Now it's over 100 billion getting remitted every year, 105 billion to be precise in FY24 itself, 5% higher year on year, but quarter on quarter it's 15% up. So just look at the pace at which that's growing. The other reason why the current account surplus is good is that the goods deficit, import-export difference has narrowed. Actually, last year, both imports and exports fell, minus 5.3 for imports and minus 3.3 for exports. This is largely price-driven because in 22, prices had shot up for all commodities due to the Ukraine war. And therefore, this is not a volume-led fall as much as a price-led fall. But the important take-home over here is that imports are falling. At a time when India could easily pay for imports, Indian industry was not able to absorb so much imports. We need to grow faster because now we have the wherewithal. So you could count that as a bit of a negative. The other negative is the FDI flows. FDI flows in FY24 is 1/3 of what it was in FY23. Again, representing that, you may be a great investment opportunity, but the world is not yet waking up to it. What does a current account surplus basically mean? It means we have exported our surplus. At a time when domestic industry has yet to pick up, when we have a long way to go in terms of the growth story, you'd rather not have that surplus, but have a minor deficit so that investments flow into India and not the other way around. So to that extent, current account surplus clearly signifies that the external constraint, the deficit, the twin deficit that we used to speak about, one of them is well and truly over. It's for us to make it and to use the opportunity of the surplus in terms of higher imports and higher capex.
Okay, all right, Lata, thanks very much for that. So positive on the macros. In fact, Lata did speak to Standard Chartered's Anubhuti Sahai and Aditi Nair of ICRA to understand their views on the current account surplus, which is come in at a surplus after 10 consecutive quarters. Listen in.
Current account deficit, as you very rightly mentioned, used to be wide and extremely vulnerable to higher crude oil prices. With doubling of services exports, we have clearly seen a structural change in current account deficit story. We are calling for 80 to 70 by end of 2024. So a little bit of strength coming from the current levels. Current account deficit to FDI. is a very, very important metric when you are looking at macro stability and also when you're looking at rupee stability. If the current account deficit gets fully funded by FDI, that provides a lot of comfort to the central bank.
I think we're in for an extended period where the current account deficit is going to, at worst, be 1.5 to 2% of GDP. And that also only if commodity prices skyrocket, perhaps because of geopolitical or other issues. I don't think the global growth outlook is going to be supportive of commodity prices being so high on a sustained basis that we get into a current account deficit at those levels. So I do think that structurally we're in for a very, comfortable period as far as our current account deficit is concerned.
Some positive news coming in there for the Indian macros, but back to the markets. Then we highlighted a lot of the top movers in today's session, but a sector that is not doing well is real estate, and the realty index is the top sectoral loser in today's session. It's down almost 2% as we speak, and there you can see some profit booking coming in there for the realty index, and 7 out of the 10 index constituents are trading with losses. Oberoi Realty is the top loser on that, and it's down 4% in today's session. Shilpa Rao, just a few on Chartbusters, had also had a sell recommendation on this stock. There's 1830 there on Oberoi Realty, and Macrotech is the other one, 3.5% lower on that stock as well. So not good going for the real estate index, but the only one that is bucking the trend in today's session among the real estate stocks is Sobha, and that is a stock that is trading with gains of 3% at a time when the index itself is down 2%. So good going for Sobha in today's trading session. But time for a short break here on Halftime Report. Up next, Sachitanand Uttekar of Trade Bulls will join in with some trading strategies. Stay tuned, back on the other side.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria. especially bacteria like strep mutans, which is what causes cavities.
Interesting.
Welcome back. Well, just want to point out that Alkem is higher because of news. So that stock is up around 3.5% and a good amount of traction there on the volumes as well. That the news is that the US FDA inspected the company's Buddy facility, which took place in March. And at that point in time, they had received 10 observations. So now the Buddy facility has been cleared by the US FDA because they've received an establishment inspection report with a VAI, a voluntary action indicated status, indicating that it's given the green light to continue manufacturing. So remember, at that point, 10 observations probably seemed quite a lot and the street was deterred by it, but they've successfully resolved it and they've now received a VAI status from the US FDA. So that's on Alkem, that stock higher by around 3.4%. Sachitanand Uttekar of Trade Bulls now joins in on the show to discuss the technicals of the market. Sachitanand, welcome to the show. Well, consolidating, but the Bank Nifty continues to do well. What is your sense in terms of how you would approach the financials today?
Good afternoon, Ekta. I think clearly, the market is lacking some confidence near this 23,600 mark. Even last week, we saw multiple attempts during the day towards this particular level, but eventually, it was failing to register a close about the 23,600 mark. So I think this is a good level of caution, and that's why we are recommending, building some good amount of short positions here when it comes to Nifty Bank as well. Now, if you look at the Nifty Bank range, it is clearly showing that 52,200, 52,300 could be a cluster resistance. And on the lower side, it has a very strong support somewhere close to around 51,700. So right now we are just moving on the upper end of this particular range, and that's why where we have seen some divergence. We are recommending building some fresh short positions when it comes to Nifty Bank for the day, keeping a stop loss somewhere close to around 52,245 on the higher side. We are expecting that the Nifty Bank could see a pullback towards 51,800.
Short positions on the Nifty Bank, interesting. Sachitanand, good afternoon. Thank you for joining in. Well, the index keeps meandering along the way it is. There has been plenty of stock-specific activity within the broader markets. Are there any on your radar this afternoon?
Good afternoon, Amos. And I think it's better to keep a long-short ratio when it comes to stocks. I think there are ample of stocks which are still showing some amount of strength. Now, there's a disclosure from our end that we have recommended this particular counter to our clients, wherein the strength has been very evident for the last 2 trading sessions. If you look at the structure of Apollo Hospital, the stock has been forming a good higher top, higher bottom sequence on its 60-minute scale. On the daily scale, it has registered a fresh breakout on its ADX, which has started moving about 25 levels. So this is a good indication of further confidence getting built in. We are anticipating that there could be a strong rally towards 6,500, 6,560 kind of a zone. And that's why we are recommending building long positions here, keeping a trading stop loss somewhere close to around 62.40 on the lower side. But on the short side, I think there are a lot of stocks which have been scaling higher. But if you look at the relative strength, it has been going down. And one such idea is Bharat Forge. Now, if you look at the sequence for the last 3 weeks, the higher top, higher bottom sequence is well intact. But if you look at the daily RSI, it has been losing its strength. So that's why it has been showing that there is a lack of confidence at higher levels. And somewhere, it has started trending below its 5-day exponential moving average. So probably we may see a quick corrective move towards 1660, and that's why we are recommending building fresh short positions in Bharat Forge, keeping a trading stop loss somewhere close to around 1760.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in, Sachitanand, and giving us all of those technical calls. Well, let's get back to specific stocks. Zomato gains on the back of positive notes from brokerages. Mangalam is here with the details on all of these brokerages, what they like about Zomato.
Well, Zomato has been gaining for a while right now, and another reason for the stock to be gaining is, the process annual report that was released yesterday, and that gave some insight into what Swiggy was doing as well. Now, Zomato's FY24 numbers are in public domain as it's a listed company. Swiggy, which is the IPO bound, had some insight. We got some insight into their FY24 numbers basis process annual report, and as a result of which brokerages have written on it. What it basically says is that even as Swiggy's operating performance is improving, they're still in losses. Zomato's performance is improving a lot more, and secondly, Zomato's revenue growth as well as all the other factors are doing a lot better than Swiggy itself. So CLSA, for instance, has a buy rating target price of 248. They say that Swiggy's overall gross order value grew at around 26%. Zomato's own business grew at about 36%, and Swiggy's trading losses reduced to about $158 million, while Zomato is making an EBITDA profit of almost $5 million. Swiggy's overall revenue as well grew a lot lower than Zomato's, upwards of 55%. And that is something that has been, coined and that has been looked at by other brokerages as well. We got a view coming in from Goldman Sachs as well. They're positive. Remember, they recently valued Blinkit higher than Zomato's food delivery business itself. And they said that Zomato has been gaining a fair amount of market share, over 200 basis points over the last 1 year. And in scale, quick commerce for Zomato's business is 50% higher than its nearest competitor, which is Instamart. And as a result of which, they are doing a lot better operationally as well, even though Swiggy's losses are narrowing. And finally, we have UBS's view as well. They have a target price closer to 250 rupees. So brokerage is valuing Zomato anywhere between 240 to 250 rupees and doing even better because they're growing faster than Swiggy.
Mangalam, thanks a lot for that update. And Zomato now at 200 rupees, very close to its all-time high, which is at 207. Time for a short break here on Halftime Report. Up next, we connect with telecom expert Prashant Singhal as the government commences auction for the telecom spectrum, valued at over 96,000 crore rupees. Stay tuned, back on the other side.
And of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand. But there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter.
Back with us here on Halftime Report. The markets continue to remain where they are at that higher point of the range where they are facing some resistance. Is the Nifty at 23,600 is where the index facing resistance. But As we speak, the index has suddenly seen a very sharp spike. It has surged to the highest point of the day now. 23,620 is where the Nifty is at. But as Ajit Anand was also mentioning, that there is some bit of lack of confidence for the bulls to sustain at these higher levels. We've been witnessing this all through last week and through the other days as well. The Nifty Bank, that is what is leading the gains, as it has been all through last week. And 52,230 now on the Nifty Bank, a percent higher at the highest point of the day. But moving on then, some other movers in today's session. PVR Inox is in focus after Nuvama in its recent note says that they see a 40% upside in the company. Vamakshi is here with the details. Vamakshi, what is Nuvama writing in its note?
Well, absolutely, Hormaz. Like you rightly pointed out, there's a report coming in from Nuvama, and they say that the months of April and May were a bit subdued for PVR Inox and in fact for the entire Indian film industry, and that is mainly on account of weak content calendar, general elections, as well as the cricket, which includes the IPL and of course the T20 World Cup, which is underway. But what they expect is that the content is likely to improve after 7 lackluster months. Strong collections are expected. Kalki 289880 is the first film that they're keeping an eye out. They're expecting 100 crores of box office collections on day one itself. Munjia is also likely to clock almost 100 crores in the month of June. The Hollywood content is also seeing a good pickup following the settlement of the writers' strike last year. Deadpool and Wolverine are slated for a 26th July release, while Transformers 1 is lined up for a 20th September release. So overall, the Hollywood content as well as the Bollywood content is picking up, and this bodes well for PVR Inox. Ad revenues are also likely to improve in FY25. Besides that, the company has said that its priority is to be net debt-free over the next couple of years. They're targeting a reduction of almost 20% in its annual capital expenditure through FOCO, that is franchisee-owned, company-operated model. They're also partnering with developers for the same. So overall, largely the focus is on debt reduction as well as moving towards a Capex light model. This bodes well for PVR Inox, and given all of these factors, the improving pipeline going forward, Nuvama has gone ahead and reiterated its buy rating, given a target price of 1,995 per share, which when compared to the closing price yesterday implies an upside potential of almost 40%.
Okay, all right. Thanks very much for that, Vamakshi. So PVR Inox is in focus. But let's focus on the telecom auctions now. Over 96,000 crores worth of airwaves are up for grabs in the telecom spectrum auction, which is set to take place today. Reema is following the story. She has more on this.
Thanks so much for that. So as you pointed out, 96,370 crore is on offer in terms of spectrum, which is across various bands: 800 megahertz, 900 megahertz, 1800 megahertz, 21 megahertz, 23 megahertz, 25 megahertz, 3,300 megahertz, and 26 gigahertz. So across 8 frequency bands, and the total amount at the reserve price, which is on offer, is 96,300 crore rupees. Now, telcos have to give an earnest money deposited, which is an indication of how much they're willing to participate, right? Sort of like a collateral. Now, the amounts which have been deposited for Reliance Jio, 3,000 crore, Bharti at 1,050 crore, Vodafone Idea at 300 crore. You take the earnest money deposited, multiply by a factor of 12, and that's the maximum amount telecom companies will be able to bid. So if you do the math, the expectation is, or the indication is, that this spectrum auction could be muted, because the EMD deposited by telcos is about 80% lower than last time, 2022. So for Reliance Jio, this time they've deposited 3,000 crore by way of a deposit, which compares with 14,000 crore last time. For Bharti Airtel, it's 1,050 crore versus a deposit of 5,500 crore last time. According to Jefferies, the amount that is being bid this year could be the lowest in close to about a decade. The reason is that all the 5G related spectrum purchase was already done in 2022. Telcos have completed their 5G rollout, so they don't need to purchase spectrum for 5G per se. So the spectrum which will be purchased today is largely for renewal of spectrum where licenses are getting expired. So Reliance Jio has put in the most at 3,000 crore rupees compared to peers. It allows them to bid for a maximum of 96,000 crore rupee, but they do not have any spectrum which is coming up for renewal. Bharti does have about 42 megahertz of spectrum which is expiring. If they look to renew that, then the outlay could be about 3,800 crore rupees. But expectation is that maybe they might just bid for some more, because Kotak anticipates 8,800 crore of bids by Bharti this time. But for Vodafone Idea, expect limited participation.
Rima, thanks a lot for that. And to discuss more on this, we have telecom expert Prashant Singhal joining in on this conversation. Prashant, good afternoon. Thank you so much for joining in. Well, so much has happened in the telecom space over the last month and a half, 2 months. But I'll start off with the auctions itself. And as Rima was highlighting, it's likely to be a subdued spectrum auction this time around. What are some of the important things that you are watching out for in this auction in particular?
Yeah, I think this is going to be a muted auction. I think the only surprise, if any, could be, if Vodafone is going to pick up any of the 5G spectrum, apart from the renewal, which is just about 12 megahertz. So if they are going to participate on 5G, I think that could be the only surprise element. We need to see, what happens because the earnest money deposit, which is there, Geo is the highest, but we know their spectrum holdings are also highest, and there's no renewal spectrum. So let's see how it pans out. The good thing is that from an industry standpoint now, auctions are going to happen every year. So there's no, there's no scramble for auction, and I think that's a very good government policy. That uncertainty of saying, okay, the next auction can happen after 3 years, 4 years, so let's get more spectrum, invest more into that spectrum right now. I think that's all gone. So where you need spectrum, you can see that I can wait for 1 year, might as well wait for 1 year and buy more spectrum. So this could be, generating maybe 25,000 crores of revenues for the government. But let's see how it pans out today.
Okay. Well, Prashant, hi, welcome to the show. Well, that's one of the key points that you mentioned about Jio, where the earnest money deposit is at around 3,000 odd crores. It's put in the max, but it doesn't have any spectrum to be renewed. So what is the reason behind that?
I think it's best for us to wait till the end, but yeah, and they've got enough spectrum holdings. So unless they want to pick up some more on 900 megahertz, which is a good spectrum. Let's see how it pans out.
Okay, all right. Overall, like we mentioned, the expectation is expected to be limited, or the participation is expected to be limited this time. What is your own expectation from the spectrum auction?
Yeah, as I said, I think it should be between 20 odd thousand crores north or south. 10%, 12%. I think that's what it should be. The renewal spectrum itself is going to be close to maybe 6,000-7,000 crores, and then there could be additional spectrum which could be in the same band for 4G. Could be another 8,000-10,000 crores, and as I said earlier, that if VI participates anything on 5G, then that could enhance the further value. So I would peg it about 20,000 north south, 10 to 15%.
Prashant, I wanted to ask you about Vodafone Idea, because that has been the one telecom stock that has been making headlines almost all through the year. Now, with the fundraise that they've done, the debt reduction plans that they are putting in place, but there is still no clarity on some of the Capex plans they should be, because the 5G rollout for them is still yet to take place on a larger scale. But now that even some of the brokerages are also mentioning that they are likely to see some limited participation from Vodafone Idea, what is the kind of spectrum that they should be bidding for, or what are you focusing on when it comes to Vodafone Idea for this auction?
No, so we are not, focusing on anything specific, but 5G, I think let's also just go back a bit. 5G for the sector has not generated incremental revenues. I think that's unfortunate, but that's the same world over, right? If you just look at world over, the incremental revenues from 5G is not more than 1 to 2%, pick up any of the markets. And a large piece of 5G revenues comes on the enterprise side. We talked about private networks. We talked about IoT over the last few years globally, but we haven't seen too much of incremental adaptation and revenues which is going to come in. So it's about an inflection point. I think in India, of course, the operators have gone and picked up the spectrum. They've invested in the networks. They haven't seen too much of growth which is coming in. I think all of them have mentioned that in multiple analyst calls. And therefore, I think for the ones which haven't invested, is this the right time for them to pick up some spectrum and look at the investment? I think that's what would be one of the strategies that one could look at, that invest now and build the Capex. But there is also a large part of 4G which is what I think they may be looking at and picking up this renewal spectrum and incremental spectrum to catch up on the 4G coverage with the other operators. So I think that may be another strategy that they may have.
Okay. All right. Prashant, now moving away from the auctions, what's your expectation in terms of tariffs? Any kind of hike, timing, quantum?
I mean, tariff hike is imminent in India. I think we said it should happen post-elections. It should happen because these tariffs are not sustainable, as we know. And the kind of consumption which is happening in India, the data consumption which is happening in India, there could be some level of misuse as well. And therefore, from an operator standpoint, I would think that at least a 20-25% tariff hike should be there. May not be at a single stroke, could be over a 1 year period with 6 months each. I think the tariff hike for at least 10 to 15% should happen very, very soon. It could be in the next 30 days for all you know. As these are quite unsustainable tariffs. I mean, everything has gone up. Inflation is going up. Every price of everything in this country is going up other than telecom tariffs.
Indeed, price of everything is going up other than telecom tariffs. Prashant, thanks a lot for joining in and sharing your insights there on the spectrum auctions and the impending tariff hikes that are yet to take place. Prashant Singhal there with his views. But time for a short break here on Halftime Report. Up next, we put the focus on Craftsman Automation and Amara Raja, which are buzzing in today's session. Stay tuned. Back on the other side.
Very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be in certain ways self-funding, at least for now.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem.
Welcome back. Well, there's been a sudden uptick which has taken place in the markets. We now have the Nifty at the high point of today. It's up around 111 odd points. We have the Sensex which is zoomed almost 500 points as well, so up around 0.6%. Good going for the Bank Nifty, which is really propelling the markets at this point in time. So the Bank Nifty has gained over 700 odd points, up around 1.5%. If you just look at the indices, the Nifty Financials, the Nifty Bank, the Nifty Private Bank, all of these indices are up anywhere between 1.3 to around 1.4%. All of them gaining at this point in time. So it is really a couple of these stocks such as Axis, HDFC Bank, ICICI Bank, all of these private banks which are gaining anywhere between 1.7 to around 2.4%. You're seeing that incremental buying coming through. State Bank of India also at the high point of the day, up around 1.5% or 1% as you can see on your screen. A couple of other heavyweights contributing on the upside as well. So L&T is doing well. That stock is up around 1%. We have Telecom, Britannia, all of these stocks which are managing to hold up with a gain of around 0.5% to 1% at this point. But really, this incremental amount of gains has definitely come in from the financials, from the private banks in particular, which have zoomed past just in the past couple of minutes. But we do have Craftsman Auto, which is buzzing in trade today as the company signed an MOU to acquire most of Sunbeam Lightweighters. Sonia is tracking this. She's here with more.
Well, thanks a lot for that. So Craftsman Auto has signed an MOU with a company called Sunbeam Lightweighting Solutions. Now, they're looking to acquire this company and they're looking to acquire either whole or part of the business of Sunbeam in 1 or 2 more tranches. Now, we don't have more details on the timeline of the acquisition, the amount of money that they're ready to pay for it. But what we do know that the transaction excludes certain assets in Gurugram. Now, Craftsman Auto as a stock has been one of the biggest movers if you look at it since its IPO. It listed in March of 2021 and the shares have risen 250% from the IPO price of 14.90 per share. Craftsman Auto is a manufacturer of automobile parts. It's known for producing gears, heavy parts, sheet metal equipment, etc. So that is one stock which is on my radar. The other stock that I'm looking at is Amara Raja Batteries, and of course we do know that the move in Amara Raja Batteries has been quite strong today because it signed a technology licensing pact with a Slovakian company called GIB, which is Gotian Inobat Batteries. Now, this technological collaboration is for lithium-ion batteries. So, Amara Raja and Inobat are working on advanced applications like electric, vehicles, electric aviation, etc. And Amara recently upped its stake in the Slovakian lithium battery tech company Inobat to 9.3%. Now, the stock has had a very strong run. It's up 80% in the past 6 months, but brokerages are positive. Investec has a buy with a target price of 12.50. JP Morgan has a neutral with a target price of 12.10, which is much below the current market price. They say that the company is taking all the right steps and their confidence on the company's ability to progress towards the 16 gigawatt capacity target. Back to you.
Indeed, 17% higher Amara Raja at a record high. The stock has already doubled in 2024. So that is a wonderful move on the stock, 150% higher in the last 12 months. Sonia, thanks a lot for that update. Time for a short break here, an halftime report. On the other side, Manisha Gupta joins in with Mahesh Palawat, the Vice President of Meteorology and Climate Change at SkyMet Weather. Stay tuned, we'll be right back.
So no overnight success, which is what people sort of suddenly, like where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application.
Right.
Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not?
Back with us here on Halftime Report. The markets have surged to the highest point of the day. The Nifty came 1 point short of the record high. There you can see 23,666, almost at a new record now. 23,667 is the record high that we are talking about. 4 out of the top 5 gainers on the index are banking stocks. HDFC Bank is leading the charge. But to our special segment then, Manisha Gupta is joining in. Manisha, good afternoon. I guess the pertinent question to ask is whether the weather will improve or not.
Well, that's a question that we will be asking our guest, Mahesh Palawat. He's Vice President, Meteorology and Climate Change at Skymet Weather Services. Mr. Palawat, hi. I mean, that's a question that everybody is asking because June until now is 18% below normal, and there's a double digit and a higher side double digit below normal that we are seeing in various states. So as of now, what we're looking at is Karnataka and Maharashtra, where the sowing numbers seem good, but the rest of the India, clearly the numbers are yet to start coming in. But I would really want your sense on whether or not are we looking at the June deficit numbers going down?
Yes, Manisha, we think that now the rainfall will improve across the country. Right from Bihar, Jharkhand, West Bengal, Uttar Pradesh, particularly initially over East Uttar Pradesh, and thereafter it will progress up to western parts of Uttar Pradesh and eventually reach Delhi by June 28. So monsoon can be declared anytime after June 28 over Delhi NCR and adjoining parts of Uttarakhand, Punjab, Haryana. So we think that now in next 24 to 48 hours, rainfall will be sufficient, or you can say decent rainfall will be there over eastern parts of the country as well as central parts of the country, particularly Madhya Pradesh, Maharashtra. These two states will receive heavy showers, or moderate to heavy showers at many places. Chhattisgarh, Odisha, Telangana, and west coast of the country will also witness moderate to heavy showers for next 4 to 5 days at least. Yeah.
Mr. Palawat, when you say heavy to heavy, very heavy rainfalls, I mean, is this an onset, or do you see that kind of a rain where you have traffic snarls and flights getting delayed?
No, not very heavy rain will not be there, but it will be, say, in the tune of 40 to 60 millimeter over coastal areas of Maharashtra, 70 to 80 or 100 millimeter over coastal areas of Karnataka and Kerala, Andaman and Nicobar and Lakshadweep area, and moderate showers in the tune of 20 to 40 over Telangana, Odisha, Bihar, Jharkhand, Chhattisgarh, and parts of Madhya Pradesh. Isolated heavy spells cannot be ruled out over Madhya Pradesh, and Uttar Pradesh will receive scattered light to moderate rain for next 3 to 4 days, and monsoon will gradually progress up to northwest India. And Gujarat, which is rain deficient, or the rain activities were very less over these areas, it may also receive moderate showers except Kutch region of Gujarat. South Rajasthan, Southeast Rajasthan will also witness light to moderate rain for next 2 to 3 days, and from June 28 or 29, monsoon will progress over eastern parts of Rajasthan as well. Yeah.
So the good news is that Delhi, of course, could see some relief, and as you said, the onset of monsoon on Delhi could be from 28th of June. Delhi clearly seems to be going through a major water crisis right now. Would you say that those concerns perhaps would take a step back as we see good rains happening there?
Yes, from 28th onward, we think that rainfall will be sufficient until first week of July. And but I am not sure whether this crisis will be over or not, because the recharge of groundwater is still a concern because rain harvesting is very less over Northwest India because people are habitual investing water in these areas. I live in Delhi and NCR. I know many people, they are not concerned about the conservation of water. So, but monsoon rains will be there and rainfall will be sufficient. The farmers will rejoice. Yeah.
Okay, that's a good news. Mr. Palawat, also, how do you see the month of June ending, and with the kind of sight that you, or a vision that you have in sense of July, the first half and second half, how is that looking at you, looking also in sense of numbers?
See, Manisha, now the rain deficit stands as 18%. So going forward, we think that this deficit will improve, and by the end of June, we think it will end with a deficit of 10%. And first week of July seems to be much better. It will cover almost entire country by first week of July, and the rain deficit will wipe out by the end of you can say by 10th of July. And thereafter, the monsoon progress will continue, and we think that it will be much better than June. Yeah.
Okay. You also talked about on how we're looking at good monsoons now spreading across Maharashtra, Gujarat, and the deficit could perhaps go. What's your sense also on the grain bowl, which is MP, UP, Rajasthan in some sense as well? How are you looking at rains now going forward?
See, Madhya Pradesh will continue to witness good rain throughout the, say, for next 15 days at least. And there will not be any deficit of rainfall over these areas. And now Uttar Pradesh, which is not, the monsoon is delayed over eastern parts of Uttar Pradesh. Now monsoon progress will be satisfactory over entire Uttar Pradesh, and Uttar Pradesh may also receive the average rainfall, which usually happen in the month of July. So average rainfall will be there. It will not be surplus, but yes, the rainfall will be sufficient for sowing, and for farmers. The farming community will be happy to see good rains, and eastern parts of Rajasthan will witness sufficient rain in the first week of July, and thereafter the western parts will also start receiving sufficient rain or good rainfall. So we can say these three states will be benefited in the month of July, as well as parts of Gujarat, and South Peninsula will also continue with good rainfall. So we can say most part of the country will see sufficient rain, except Northeast India, Gangetic West Bengal, and parts of Odisha. Yeah.
All right, Mr. Palawat, thanks a lot for sharing with us those updates on the progress of the monsoon. Manisha, thanks a lot for that as well. Some heartening updates coming in there from SkyMet. By the way, before we call time on this edition of Halftime Report, the market, the Nifty has made a new high. 28,668.7 is the record high that the Nifty has made as we speak. All the index heavyweights putting their hand up in today's trading session. HDFC Bank now contributing 64 points, so almost half of those gains on the Nifty coming in from HDFC Bank, and courtesy of the move that the bank has seen over the last 1 month, the stock has also turned positive for the year. And on this positive note, it's a time wrap on this edition of Halftime Report from Ektami and the team that put this show together. Thank you so much for watching. Business Lunch comes up next.
With somebody else, and what kind of internal tools and technologies do we need to make this all happen?
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at Nvidia today. Yes. And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with Nvidia becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now Nvidia is clearly leading in terms of AI, and they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast Nvidia is growing, and it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI, and if you haven't got a good AI strategy, well, implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
You know, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, you know, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided.
Stocks trend higher, drive the Nifty to a record high led by financials, and the Nifty Bank also hits a record high. FMCG, real estate and metals, however, continue to lag.
The Happiest Minds stock slides after founder and chairperson Ashok Soota likely sells near 6% stake via block deals. The sale isn't out of sync with the founder's stated intent.
Amara Raja zooms on inking a licensing deal to make lithium-ion batteries with Slovakia's GIB Energy X, while Craftsman Automation's MOU to acquire most of Sunbeam Lightweighters propels it higher in trade.
India posts a current account surplus for the Jan to March quarter of 2024 on strong services, exports and remittances. But capital flows were marred by a fall in foreign direct investment. Rupee is unmoved as data was on expected lines.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha. With me is Sonia. So Sonia, good day of trade today. In fact, some of the record smashing moves by the indices yet again, but that's also become the order of the day after a few days of lull. So that's what we are looking at. Let's take stock of market at lunch hour, and 0.5% on Nifty 50, 23,650 odd levels at this particular point, high point of the trading session, over 100 points gain. When we talk about Sensex, it's closing in on about 500 points of gains, but all this is really led by the big financials. The big banking blue chips are the ones which have really taken the lead, 1.5% up on Bank Nifty at this point, but it's the mid-cap, the broader universe, which is taking a beating, 0.4% down on mid-cap index. But advanced decline ratio still is higher when it comes to more advancing stocks. On my screen, as we stated, some of the banking counters are the ones which are taking the lead. Axis Bank, ICICI Bank, and the big boy, HDFC Bank, really propelling the market higher. And on the downside, some of the PSUs are not doing well. And also some bit of profit booking has also creeped in. BPCL, Coal India, ONGC are the top Nifty draggers in terms of percentage. Sonia.
Oh, absolutely. You know, in fact, I was just looking at how the market has performed in the last 1 month, right? If you pull up from the 4th of June lows, this market has gained substantially. It's almost a 7% rally that we've seen from the lows that we saw on the 4th of June. I mean, that's no mean feat, right? Big moves coming in. All of the volatility that we saw post-elections, all of the volatility that we've seen because of the global cues, all of that, the market has chosen to buy that dip. And that is the moot point, really. This is a buy on dips market through and through. But India has posted a current account surplus in the Jan to March quarter. This is the first after 10 quarters. Can this feat be repeated? Lata is here with her editor's take. Lata, over to you.
First, what has led, why it is a bit historic. We've always had a current account deficit as a burden on the economy. In 1991, it led us to, possibly defaulting on IMF loan and collateralizing our gold for that. In 2013, we were called one of the fragile five. So if all those huge deficits are now replaced by a minor surplus, then that becomes very important. It's a surplus of 0.6% for the fourth quarter. For the full year, it's a deficit FY24, but it's a minor deficit, 0.7% is neither here nor there. It's almost a balance. So what caused it? It's primarily the big growth in India's services exports, mostly software exports. They've been doing well. They're doing even better now. So it's a 9% growth in services exports to $142 billion. On the back of this, there's also something called the business process exports that's growing. Those are the GCCs, the global captive centers, which are not software, the non-software global captive centers where, accounts, all the middle office work, accounts, compliance, risk, tax, payrolls, etc. are processed in India for Western economies and developed country companies. So that has grown by about 40%, albeit on a small base. The other big positive is the Indian diaspora, Indians living abroad and remitting money. Now it's over 100 billion getting remitted every year, 105 billion to be precise in FY24 itself, 5% higher year on year, but quarter on quarter it's 15% up. So just look at the pace at which that's growing. The other reason why the current account surplus is good is that the goods deficit, import-export difference has narrowed. Actually, last year, both imports and exports fell, minus 5.3 for imports and minus 3.3 for exports. This is largely price-driven because in 22, prices had shot up for all commodities due to the Ukraine war. And therefore, this is not a volume-led fall as much as a price-led fall. But the important take-home over here is that imports are falling at a time when India could easily pay for imports. Indian industry was not able to absorb so much imports. We need to grow faster because now we have the wherewithal. So you could count that as a bit of a negative. The other negative is the FDI flows. FDI flows in FY24 is 1/3 of what it was in FY23. Again, representing that, you may be a great investment opportunity, but the world is not yet waking up to it. What does a current account surplus basically mean? It means we have exported our surplus. At a time when domestic industry has yet to pick up, when we have a long way to go in terms of the growth story, you'd rather not have that surplus, but have a minor deficit so that investments flow into India and not the other way around. So to that extent, current account surplus clearly signifies that the external constraint, the deficit, the twin deficit that we used to speak about, one of them is well and truly over. It's for us to make it and to use the opportunity of the surplus in terms of higher imports and higher capex.
Indeed, Lata, it is definitely a big deal. In fact, Lata also spoke to Standard Chartered Bank's Anubhuti Sahai as well as Aditi Nair of ICRA to really understand their views on the current account surplus. Listen in.
Current account deficit, as you very rightly mentioned, used to be wide and extremely vulnerable to higher crude oil prices. With doubling of services exports, we have clearly seen a structural change in current account deficit story. We are calling for 80 to 70 by end of 2024. So a little bit of strength coming from the current levels. Current account deficit to FDI is a very, very important metric when you are looking at macro stability and also when you're looking at rupee stability. If the current account deficit gets fully funded by FDI, that provides a lot of comfort to the central bank.
I think we're in for an extended period where the current account deficit is going to, at worst, be 1.5 to 2% of GDP. And that also only if commodity prices skyrocket, perhaps because of geopolitical or other issues. I don't think the global growth outlook is going to be supportive of commodity prices being so high on a sustained basis that we get into a current account deficit at those levels. So I do think that structurally we're in for a very, comfortable period as far as our current account deficit is concerned.
Okay, over 96,000 crores worth of airwaves are now up for grabs in the telecom spectrum auction set to take place today. Reema joins in to tell us more on that. Reema, over to you.
Thanks so much for that. So as you pointed out, 96,370 crore is on offer in terms of spectrum, which is across various bands: 800 megahertz, 900 megahertz, 1800 megahertz, 21 megahertz, 23 megahertz, 25 megahertz, 3,300 megahertz, and 26 gigahertz. So across 8 frequency bands, and the total amount at the reserve price, which is on offer, is 96,300 crore rupees. Now, telcos have to give an earnest money deposited, which is an indication of how much they're willing to participate, right? Sort of like a collateral. Now, the amounts which have been deposited for Reliance Jio, 3,000 crore, Bharti at 1,050 crore, Vodafone Idea at 300 crore. You take the earnest money deposited, multiply by a factor of 12, and that's the maximum amount telecom companies will be able to bid. So if you do the math, the expectation is, or the indication is, that this spectrum auction could be muted because the EMD deposited by telcos is about 80% lower than last time, 2022. So for Reliance Jio, this time they've deposited 3,000 crore by way of a deposit, which compares with 14,000 crore last time. For Bharti Airtel, it's 1,050 crore versus a deposit of 5,500 crore last time. According to Jefferies, the amount that is being bid this year could be the lowest in close to about a decade. The reason is that all the 5G related spectrum purchase was already done in 2022. Telcos have completed their 5G rollout, so they don't need to purchase spectrum for 5G per se. So the spectrum which will be purchased today is largely for renewal of spectrum where licenses are getting expired. So Reliance Jio has put in the most at 3,000 crore rupees compared to peers. It allows them to bid for a maximum of 96,000 crore rupee, but they do not have any spectrum which is coming up for renewal. Bharti does have about 42 megahertz of spectrum which is expiring. If they look to renew that, then the outlay could be about 3,800 crore rupees. But expectation is that maybe they might just bid for some more because Kotak anticipates 8,800 crore of bids by Bharti this time. But for Vodafone Idea, expect limited participation.
All right, expect limited participation, and that's the view coming in on upcoming spectrum auctions. Moving on then, pulse, onion and tomato prices, they have surged up, also following a record heat wave in the country. Now, the centre has imposed stock limits to keep the rise in prices of pulses in check, and the government has also bought over 70,000 tons of buffer onion stock and expect the prices to stabilize as the monsoon progresses. In fact, my colleague Santiagora was at the APMC market in Pune to get us a ground report on the soaring vegetable prices. Take a look.
So the tomato price has reached the mark of rupees 100 per kg in multiple parts of the country, especially the southern states. So what exactly is leading to this? First of all, the annual monsoon factor is in the play here. But other than that, this year, the summer crop of tomatoes got destroyed because of intense and excessive heat. And that has led to an imbalance in the demand-supply chain, which has led to this spike in tomato prices. Now, what happens every year is monsoon factor, which usually leads to a price hike during this time of the year. The fresh monsoon crop of tomatoes, the moment it hits the market, that leads to cooling down of these prices. But this year, because of the delay in monsoon's progression, this delay has led to a delay in the sowing of kharif crops, including tomatoes. That means that the monsoon crop, which was all set to hit the market towards the end of July, is going to take some time, which means that the much needed respite in the price of tomato is going to take some time. It's going to further delayed, and the worrisome factor is that the prices could increase further.
My God, okay. So tomato prices above 100 rupees a kilo now and expected to increase further. Santya also spoke to a few tomato farmers who described their plight given the difficult conditions that they are facing. Listen into what they had to say.
क्या हुआ अभी वो हीट की वजह से कुछ माल कम निकल रहा है, कितना भी बाजार बढ़ गया तो कुछ वो भांडवल बहुत लगता है, कॉस्ट बहुत लगती है, इसलिए कुछ फायदा नहीं होता है। 1000 के आगे जाएगा तो भी इससे खेत सब फार्मर को कुछ नहीं मिलता है, हाथ में मिलता है। मजदूरी बढ़ती है, भाड़ा लगता है।
हर साल 2-4 लाख होती है, मगर इस साल में धूप के वजह से, बारिश के वजह से बहुत कम हुआ है। 1 लाख भी नहीं हुआ है। सब खेती वालों को ये टमाटर माने ये हुआ है, नुकसान हो गए।
आज 950 रुपये क्रेट गया है, पर लेकिन इस साल में तेज पकड़ा है, लेकिन तेज
मतलब 50 रुपए किलो गया होगा।
हाँ, 50 रुपये केजी टमाटर गया है, पर लेकिन उतना उसको किसान को प्रोडक्शन हो रहा नहीं है। उस हिसाब से हर साल टमाटर का 1 एकड़ जो खेत होता है उसमें 800, 900, 1000 पूरा सीजन में जाता है एकड़ के हिसाब से, लेकिन ये साल में 200 क्रेट भी नहीं जाएगा, क्योंकि ये धूप के टेम्परेचर की वजह से फसल इतनी खास नहीं है।
मतलब
तो
दाम
ये 1000 रुपए क्रेट है, पर कुछ मतलब नहीं है। 3000, 4000 तक क्रेट जाएगा तो किसान को कुछ तो उसका नुकसान, अब जो एक्सपेंसेस हुआ है वो निकल जाएगा।
All right, so the climate change is really having an adverse impact on the food product prices. In fact, our colleagues here, Abhimanyu Sharma, also spoke to the Consumer Affairs Secretary to take stock of the situation on pulse stock limits that was imposed, and also on onion prices and more. Take a listen.
As you would know that because of heat wave and a very intense at that, the prices of pulses had been stable but very high for the past 6 months, and therefore we were also trying to import them from wherever it was possible, but all this was not softening the prices, and therefore we thought as a last resort to impose stock limits on pulses and make sure that beyond this limit, if any of the entities are found to be carrying the stocks, they will be confiscated and they'll be seized, and the entities will be duly taken for the penalty that has been in the Essential Commodities Act. Now, we are now witnessing that there has been now a decline of, say, between 50 to 200 rupees per quintal in all of these pulses, and that shows that actually the imposing of stock limit on pulses has been very, very beneficial. If the Kharif, sowing of onions, which has already, we can see that the area has actually increased from 2.5 lakh hectares to about 3.5 lakh hectares across the country. I think the production will also give everybody a sense of comfort to further, bring, say, ease to both the farmers and the traders as well as consumers.
Okay, well, let's take a short break. Up next, we get you the latest as the race for the Speaker's post heats up in the Lok Sabha. Stay tuned.
It and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice, and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled.
You're watching Business Lunch on CNBC TV18. Well, as the union budget approaches, sources are telling CNBC TV18 that the Mines Ministry will be seeking a higher allocation from the Finance Ministry this time around. Abhimanyu is here with the details. Abhimanyu, over to you.
Well, as far as asset monetization is concerned, the Mines Ministry aims to achieve rupees 4,500 crores through the asset monetization of 367 blocks which have been put up for auction till now, and the pre-budget consultations are expected to take place with the Finance Ministry. The Mines Ministry is likely to seek an enhanced budgetary allocation for more exploration as well as geological surveys of several mineral blocks which have not been taken up yet by several private players. Of course, the ministry, the government wants to make these blocks more alluring, more attractive to be taken up for mining as far as mining of critical minerals is concerned. Now, India is looking to ensure that the mining of critical minerals gets operationalized with respect to the new blocks which have been put out by the government, not just with respect to several other metals and commodities, but particularly metals like lithium, tin, titanium and copper. As of now, India imports as much as 95% of its copper requirement for a metal which is extensively used in electric and plumbing domains. And also with respect to lithium, India is looking to ensure that it gets more lithium extracted from the mines which have been put out for operationalization, even for tin and titanium, which find extensive uses in space technology, in automobiles and in several other heavy industries. India is looking to operationalize more and more of mines which have been put on the block to ensure that these critical minerals are available in India and the dependence on imports reduces.
Thank you so much, Abhimanyu, for getting us that important story, mineral reserves of the country, and to harness that. So those were the pre-budget consultations. Let's also bring you all the action from the Lok Sabha session, which just started now in a clear signal that the Narendra Modi government and the NDA government is betting on continuity. Om Birla is all set to file his nomination for the Speaker's position for the second straight time. Now, meanwhile, Congress MP K. Suresh has filed his nomination for the position as the opposition's joint candidate, and reports also suggest that the opposition is seeking the Deputy Speaker's chair, a position which, remember, has remained vacant since 2014. Here's what Congress leader Rahul Gandhi had to say on the matter.
पूरे ऑपोजिशन ने कहा है कि हम स्पीकर को सपोर्ट करेंगे, मगर कन्वेंशन ये है कि डेप्यूटी स्पीकर ऑपोजिशन को मिलना चाहिए। राजनाथ सिंह जी ने कल शाम कहा था कि वो खारगे जी को कॉल रिटर्न करेंगे। अभी तक राजनाथ सिंह जी ने खारगे जी का कॉल रिटर्न नहीं किया है। तो मोदी जी कह रहे हैं कंस्ट्रक्टिव कोऑपरेशन हो, और फिर हमारे नेता को इंसल्ट करा जा रहा है। तो नियत साफ नहीं है। नरेंद्र मोदी जी कोई कंस्ट्रक्टिव कोऑपरेशन नहीं चाहते हैं, क्योंकि कन्वेंशन है कि डेप्यूटी स्पीकर ऑपोजिशन का होना चाहिए, और हमने कहा है, पूरे ऑपोजिशन ने कहा है कि अगर कन्वेंशन फॉलो किया जाएगा तो पूरा समर्थन स्पीकर के इलेक्शन में हम देंगे।
Okay, well, that's the latest over there. But moving on to updates on Delhi's water crisis, Delhi's water minister Atishi has alleged that Haryana is releasing 100 MLD less water, which is affecting 28 lakh residents of Delhi. This comes just a day after many AAP ministers wrote to Prime Minister Modi requesting his intervention in this matter. Meanwhile, Atishi, who was on a hunger strike for the last 5 days, has been admitted to LNJP hospital after her blood sugar levels dropped.
Some political updates also coming in from the national capital today. Well, the Delhi High Court is expected to announce the verdict on Enforcement Directorate's petition to stay the bail on Delhi Chief Minister Arvind Kejriwal today. Now, the Rouse Avenue Court granted bail to Arvind Kejriwal on Thursday, who was arrested in connection with the excise policy case. The Delhi High Court has currently placed an interim stay on the CM's bail after ED intervened with their petition. Now, the AAP chief has filed a review with the Supreme Court to contest the High Court's decision on the interim stay on the bail plea.
Well, let's take a short break for now. More global news and updates to follow on the other side. Stay tuned.
Friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or at least supporting a friend's team.
And so I...
Welcome back. You're watching Business Lunch, and Nifty 50 scales new high, currently at 23,690 levels. Don't lose sight of markets, but we'll get you the latest coming in from the geopolitical tensions in West Asia. And Israel's defense minister held talks with the U.S. Secretary of State Antony Blinken on Monday as tensions continue to simmer with Lebanon. Now, in a statement after the meeting, the U.S. reiterated the need to avoid a further escalation in this war.
Well, moving on to some international updates, WikiLeaks founder Julian Assange has pleaded guilty to charges of leaking matters pertaining to U.S. national security. This after striking a deal with the U.S. Justice Department in the WikiLeaks espionage case. The deal marks the end of Assange's legal battles, in which he spent over 5 years in a British high-security jail and in the Ecuadorian embassy in London while battling extradition to the U.S., where he faced 18 criminal charges.
All right. That's a very big global development, but completely out of time on this edition of Business Lunch. But Midcap Radar is coming up next. Don't go anywhere. Thanks so much.
It's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League, cricket here. And, I'm part of the San Francisco Unicorn team. And so it's fun.
So the Hyderabad mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, I mean, rather than, in this case, the mafia, this is all about a passion, and cricket's a global sport. And actually the funny thing about sport just brings together people like no other activity. And, just the amount of excitement but now we have to go win it all, right? I mean, we've just got to the, Super 8s. And unfortunately, the India-Australia match, I have a board meeting on that day. So it's going to be...
Big conflict.
No, the board meeting is going to take priority. But, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Award.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Hormaz Patake, and you're joining us on the show today, Hormaz, when Nifty has scaled new highs. And this is a day where no one's complaining except for some investors in the mid-caps, but that's again some profit booking. Nifty Bank is doing well above that 52,500 mark. So it's all come together for the bulls.
The fact that the Nifty is at a record high, it owes a profuse amount of thanks to the Nifty Bank, and all the banking heavyweights who have put their hand up today. And that has been the flavor of the day so far, which is banking and financial stocks which have led the Nifty higher. But let's begin Midcap Radar with the top headlines at 1:30 p.m. Stocks trending higher, driving the Nifty to a new record high led by financials. The Nifty Bank also hits a record high of its own. FMCG, metal and realty continue to lag, while mid-caps are significantly underperforming.
Amara Raja stock zooms to over 15%, hitting all-time high after entering into a lithium-ion battery tech licensing pact with Slovakia's GIB. Brokerages Investec and JP Morgan too are bullish on the stock.
Happiest Minds falls over 7% after 1.27 crore shares or 8.3% of equity worth over 1,076 crore rupees changed hands in a block deal. Sources tell CNBC-TV18 that promoter Ashok Soota is likely to have sold that stake.
Hitachi Energy gains after the company bagged order worth 790 crore rupees from its subsidiary Hitachi Energy Australia for the development of high voltage direct current links between Tasmania and Victoria.
And Craftsman Automation shares surged to near their record highs after the company signed an MOU with Sunbeam Lightweighting Solutions and Kedara Capital Fund to acquire whole or part of the Sunbeam business in one or more tranches.
Okay, all right. Those are the top headlines that we are tracking today. And the big news, of course, is Nifty scaling that new high. Right now, it's above the 23,660 mark. So comfortably higher by 125 points. And as Hormaz was pointing out, it's the Bank Nifty, which is supporting a lot of the gains that we are seeing in the Nifty today. You know, there were a couple of times when Bank Nifty did see some profit taking after a stellar run, but it has made a comeback. And, you know, if you look at the market, Hormaz, it's not a lot of contribution coming in from different sectors. It's just the IT space, which is in the green, the banking space, which is in the green. But other than that, most of the sectoral indices are in the red today. So it's really the banking pack which is doing well.
It's one sector that is pulling the market higher, and the same can't be said about the broader markets. It's not very often we say that the mid-caps are underperforming in today's trading session, but they are. As a matter of fact, the small cap index is trading with gains of just about 0.25%, but the mid-cap index is where the pain lies. 0.5% lower now, almost 300 points down on the mid-cap index is what we are seeing right now. The IT index, as Sonal was mentioning, is the only sectoral index that is in the green other than the Nifty Bank. Almost every other sector, be it Pharma, be it PSU banks, all of them are trading with some amount of losses in today's session. But the Nifty making new highs, can't say the same for the broader market.
You can't, but there is some profit booking after that stellar run. So that is par for the course as well. But it's a good time to get a technical check on the markets. Shrikant Chauhan of Kotak Securities is joining us for just that. Shrikant, good afternoon. Thank you so much for joining us. But new highs in the Nifty, Bank Nifty is doing really well. What are the charts suggesting? Would this continue, or we could see some consolidation at these levels?
Good afternoon, Sonal. Good afternoon, everyone. I think, see, like market is very close to its crucial level of 23,700, and till the market is not crossing this level, we are not going to see any broader sort of activity in this market. And maybe that's the reason we are seeing a lot of calmness in the market. Bank Nifty is a sectoral index, and that is why we are seeing good amount of buying attraction in private banks. And that's the reason Bank Nifty is also trading above its crucial resistance of 52,000. But till the markets are not crossing, I think 23,700, we are not going to see any major activity. But yes, on the dismissal of that, we are certainly expecting activity in the broader market. And that time number of stocks can participate in this market. But currently, I think a lot of profit taking is happening. And once the breakout happens, then we can see the major action in this market.
Okay, all right. Could see some major action in this market. But any individual names that are on your radar?
Yeah, I think few stocks are really doing well. They are forming some specific bullish formations on monthly basis. In fact, Geo Finance, which is currently trading around some 358, 359, it's consistently holding below the levels of 360. But at the same time, on monthly chart, if we see the technical pattern, then it is forming some consolidation pattern, continuation pattern. And based on that, we could see the levels of 400 in next few weeks or few months. So at this level, it's a buy with a target of 400. We can keep stop loss somewhere close to 345. And the other stock, which we like, is Indus Tower. And there also, we are seeing good amount of consolidation. In fact, it is stuck between the levels of 350 and 330 on the downside. There was a block deal, and after that, we are seeing again buying momentum in the stock. So based on its technical formation, the next level to watch out for would be 370.75. So it's a buy at current levels around 345, 344 with a stop loss close to 330.
Okay, all right. Thank you, Shrikant, for joining us. So those are some individual stocks as well on Shrikant's radar. Well, let's focus on mid-caps. Not doing so well in trade today. Hormaz from my right has gone to the left on the big wall. He's going to take us through the mid-caps that are moving around in trade. Hormaz, take it away.
A lot of things going right for the benchmark indices, but can't say the same for the mid-cap index. That is where the pain lies as of now. Almost 300 points lower is where the mid-cap index is. So I'll start off with the losers from the broader markets in today's trading session. And Happiest Minds is the one that tops the charts. And that is almost on expected lines because of the large block deal that took place. The supply that came into the market, 8.5% lower is Happiest Minds Technologies. They're 841. MRPL seeing a bit of profit booking. The stock was higher in yesterday's trading session. United Brewery is also down over 4%. And some of the rail PSUs also seeing some bit of profit booking after the move that they're seen in 2024. RailTel is one of them, 3.5% lower in today's session. But a sector that has been feeling the pain all through the trading session today is real estate. And the Nifty Realty Index is the top sectoral loser in today's trade, and almost all of the constituents barring Sobha are trading with losses in today's session. Oberoi Realty is down 5%, Macrotech down 4.5%, Brigade, DLF, all of them seeing cuts of anywhere between 3 to 3.5%. So some bit of profit booking coming in for real estate. Another sector that is witnessing profit booking after the move that we have seen over the last month and a half is metal stocks, and all of them on the screen are at the lowest point of the day. NMDC, SAIL, Nalco seeing losses of anywhere between 1.5% to well over 3% in today's trading session, and most of the metal index constituents are also trading with losses. Some stocks that are doing well on the back of volumes, and we highlighted some of them in our headline segment. Craftsman Automation is one of them. It's nearing its record high, which is around 5,500, so almost 5,460 now, 13% higher, continuing to build on the gains from the morning. Olectra, Greentech, some of these electric bus related stocks. JBM Auto is also doing well in today's session. Raymond is up 6%, and Amara Raja, possibly the stock of the day, now 17% higher at a record high is Amara Raja. And lastly, some other stocks that are bucking the trend in today's trading session, which is on the upside. And Krishna Medical, we'll talk about it more on the show, 3% higher there on a stock split news. Patanjali Foods, Godrej Agrovet has seen a sharp surge, 9% higher now is Godrej Agrovet. And lastly, Garden Reach seeing some bit of buying interest as well.
Oh, yes, absolutely. So these are the big movers in the broader markets. We do have a handful of gainers as well, despite the index not doing so well. Let's slip into a short break now. When we return, we'll be joined by Sunil Shari, who's the co-founder and managing director of Rosari Biotech, to discuss the business outlook and the recovery in the chemical sector as well. Stay tuned.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive.
Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Let's put spotlight on the specialty chemical space. In a recent note, Nuvama indicated that players primarily catering to FMCG are the likely beneficiaries of improvement in rural demand. So they've named stocks like Galaxy Surfactants, Fine Organics and Rosari Biotech, which will see an improvement because of this demand improvement as well. To discuss this and more, we have Sunil Shari, the co-founder and MD of Rosari Biotech, joining us now. Mr. Shari, good afternoon. Thank you so much for joining us. I wanted to understand the demand scenario. How is it like right now if we compare it to the previous quarter and last year in all the three segments? Are there green shoots in terms of price recovery, or is it just volume recovery?
No, last year you see in the year 23-24, we did a healthy growth in exports, and we also did a healthy growth in the domestic market, and we foresee good demand both in the domestic and the export market. The HPPC segment, which is now nearly 3/4 of our sales at 75%, and exports, which is now 1/4 of our sales, these two seem to be the growth drivers for the future. We did two acquisitions in the year 2021, and both these acquisitions, Unitop and TriStar, have done exceedingly well. Our lab at IIT has added, a lot of new products to our pipeline, and the surfactant business seems to be growing at a very, very good speed. Both the home and personal care and the performance chemicals are all doing very well for us.
Mr. Chari, good afternoon. Thanks a lot for joining in. You mentioned that exports are now almost 1/4 of your sales. Do you plan on increasing that number going into FY25, or you're happy with the way things are shaping up right now?
Our efforts is on to grow the exports business, but I think also the domestic business is doing well. We see healthy demand both. So if the business grows both in domestic and exports, this is something we are looking at. We have also done well with our ROCs now at 21%, ROIC is at 15%, and even ROE has improved to 13%. So we see, our focus is to grow the EBITDA. We have the highest ever EBITDA at 250 crores last year, and we are practically at a very low debt, nearly a zero debt position today. So at all, we think the worst is behind us, and the current financial year should be again our highest ever in EBITDA.
Okay, all right. I wanted to talk about the textile business. It has registered 5% volume growth in the year gone by. Is this something which would continue, or you'll do better in FY25 versus FY24? Because you said exports are doing well. Even we've seen that these textile players have done well in terms of exports. Is this something which would tie in terms of higher volume growth for you?
Yes, I think we should see better, sales in the textile chemical segment also. It has been a cash cow. We don't invest too much money in textile chemicals, but we are in a commanding position, and we should grow in this business. The HPPC always would be the growth driver for us to grow in the future.
Mr. Chari, you have some capacity coming up, which is in phases. Could you share a timeline on when all of that comes up on stream, and would that capacity coming on stream result in a bump up on your top line in the second half of, say, FY25?
No, the major capacities will come in the last quarter of this financial year. We are expecting it to be up and running by March 2025. So we'll see the growth in sales in the next financial year.
Okay.
So you're at 470, 480 crores on a consolidated basis right now, Mr. Chari. Where do you expect to end FY25 at? Say, would 600 crore be a fair number to assume?
We expect 10 to 12% growth in the current financial year. So in terms of the EBITDA, we should also see 10 to 12% EBITDA growth in the current financial year.
Okay, so with this new expansion coming in as well, Mr. Chari, will there be margin improvement? Will this be margin accretive expansion for you?
The products you're targeting would be in the same margin as at the present. So, we would guide on the same kind of EBITDA margins which we are doing. The world is, very volatile and very uncertain. So I do not want to promise anything higher at this moment.
What kind of uncertainties are you facing right now, Mr. Chari? Would you like to elaborate on those?
Especially on the freight front, we are seeing a lot of uncertainty. The freight rates are increasing. But also, the China-Taiwan war is something where we are seeing, and even the uncertainty in the Gulf, because lead times for raw materials from Europe and US are increasing, but also our exports lead times are increasing. This is something which is worrying us.
Okay, so this is something we'll be tracking closely because you're not the only one talking about issues around exports in terms of freight costs and the lead time as well. A lot of companies are facing that in the sector, which are largely export oriented. We don't talk about this business so often, the institutional cleaning business. How is that doing? Can you elaborate? What are your plans for the next 2 to 3 years? How is it contributing currently? What were the FY24 revenues and the bottom line in this particular business, and how do you plan to grow it?
The institutional cleaning chemicals is a very difficult business to get in now. We're number 2 in India. The market leader has been a market leader for 40 years. It requires high amount of service, high amount of audits, training, and we have nearly now 175 people on the field who go and train the customers. Last year, we did sales of 150 crores, and we are expecting a very good growth in this segment. This is part of the HPPC segment. We go to malls, hospitals, airports, offices, and supply cleaning, hygiene, and disinfection products. Even hospitality, like the HoReCa sector, is a focus area for us to grow. We should grow at a much higher rate than other businesses in the institutional cleaning chemicals business.
Could you come back again with the bottom line number? Are you making profits here first up? And is it a business where you're using a lot of working capital? Are you comfortable with that?
Yeah, so this is an area where we have to invest in a lot of new products, a lot of raw materials which are imported, fragrances are imported, a lot of antibacterials, antifungal agents are imported. So we have to keep a higher amount of working capital for this business. But this is also going to drive a lot of growth for us in the future. We have, EBITDA which is positive, but less than our total consolidated EBITDA. But we think that when the business scales up, the EBITDA would be higher than our consolidated EBITDA.
Could you put a number to that, Mr. Chari? You said you'll grow faster than the industry when it comes to this institutional cleaning business. If you can share a number on that front, what is the kind of growth that you're envisaging? And also, I'll club in the second bit as well with the HPPC business, which is at around 30%. Do you believe that this is a sustainable growth rate, say, for the next 2 to 3 years?
Because we don't foresee big growth in the textile segment. Whatever growth comes in will come in from the HPPC segment. And the institutional cleaning chemicals and the hygiene and disinfection portfolio, so we should do more than 25% growth on the last year figure of 150 crores.
Okay, all right. We'll be talking about this in greater detail after your Q1 numbers as well. The earnings corner is still very close to us. So thank you so much, Mr. Chari, for joining us today and giving us all those details. So that's the word coming in from Rossari Biotech. There is a definite improvement in demand. But on the export side, like a lot of other chemical companies have spoken about as well, the freight costs, they continue to remain a big issue, and the lead time in terms of orders as well. We'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific updates, Alem Labs and KIMS, which are buzzing in trade today. Stay tuned.
Award-winning news show India Business Hour drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube. With me, Shriram Finance.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a mistake.
Back with us here on Midcap Radar, and let's put the spotlight on Alem Labs now, as the US FDA has issued an establishment inspection report for the company's manufacturing facility in Baddi. Ekta is here to tell us more. Ekta.
Thanks for that. Well, yes, you know, Alem is in focus because their Baddi facility has received a VAI, or a voluntary action indicated status, in the establishment inspection report, which is issued by the US FDA, which means that they have got an all clear from the US FDA to continue producing from that facility uninterrupted. Now, why exactly is the stock higher is because at one point in time when the Baddi facility was inspected, which is the outcome which we know now in March and April of this year, it was issued 10 observations. So the street assumed that those 10 observations might be difficult for them to solve when it comes to the Baddi facility, but they've managed to resolve it successfully, and it is one of the most important plants for them when it comes to the US business, and hence you can see the stock high.
Okay, all right. Thank you so much, Ekta, for joining us with those details. With that, let's move on. Kim's is the other stock which is doing well in trade. The board will meet on June 28 to consider stock split. Ramas, tell us more.
You know, interesting update that came out last evening for Kim's, and they are going to meet on the 28th of June, as you just mentioned. They are going to consider a stock split. Now, this is the first such corporate action that the company is undertaking. And they have also mentioned the quantum of the stock split. They are going to split one share of, which is a face value of 10 rupees currently, into 5 shares of a face value of 2 rupees. So it's a 5:1 stock split that the company is going to carry out on the 28th of June. The record date, of course, is yet to be determined. That they haven't done. As I mentioned, this is the first such corporate action that the company has undertaken. They haven't taken a bonus issue or a stock split or any such action previously. So that is what is keeping the stock buzzing as well in today's trading session. Now, Kim's is a hospital chain, has presence across Telangana, Andhra Pradesh and Maharashtra. It's a multi-speciality hospital chain as well. So that is Kim's for you. Now, interestingly, Kim's made its stock market debut in 2021, and the day of the board meeting, which is the 28th of June, is the day when the stock had listed in 2021. So it will exactly be 3 years since the stock went public, did Kim's, and it was an IPO price of 825. The stock had listed at a 22% premium as well. So it was a healthy listing, and since then the stock has built on to those gains. It is almost up 150% now from that IPO price of 825 is Kim's. The stock in this year has been a bit of an underperformer. It's down almost 12% from the record highs of around 2356 that it had made in the month of June earlier this year. So it's around 12% down from the record highs is Kim's, and the rally that the stock has seen over the last few trading sessions, in the month of June itself the stock is up 16%, and as a result of which the stock has turned positive for the year, and now it is trading with gains of 7% on a year-to-date basis. On the last 12 months also the stock has surged around 19%, but today 3% higher is Kim's, 2113 on the stock. But onto the other mover that made headlines this morning, Zomato is still in the green, trading near record highs, and that is on the back of positive notes from brokerages. Mangalam is joining in with the details.
Well, Zomato has been gaining for a while right now, and another reason for the stock to be gaining is, the Process annual report that was released yesterday, and that gave some insight into what Swiggy was doing as well. Now, Zomato's FY24 numbers are in public domain as it's a listed company. Swiggy, which is IPO bound, had some insight. We got some insight into their FY24 numbers basis Process annual report, and as a result of which brokerages have written on it. What it basically says is that even as Swiggy's operating performance is improving, there's still still in losses. Zomato's performance is improving a lot more. And secondly, Zomato's revenue growth as well as all the other factors are doing a lot better than Swiggy itself. So CLSA, for instance, has a buy rating target price of 248. They say that Swiggy's overall gross order value, grew at around 26%. Zomato's own business grew at about 36%. And Swiggy's trading losses reduced to about $158 million, while Zomato is making an EBITDA profit of almost $5 million. Swiggy's overall, revenue as well grew a lot lower than Zomato's, upwards of 55%. And that is something that has been, coined and that has been looked at by other brokerages as well. We got a view coming in from Goldman Sachs as well. They're positive. Remember, they recently valued Blinkit higher than Zomato's food delivery business itself. And they said that Zomato has been gaining a fair amount of market share, over 200 basis points over the last 1 year. And in scale, quick commerce for Zomato's business is 50% higher than its nearest competitor, which is Instamart. And as a result of which, they are doing a lot better operationally as well, even though Swiggy's losses are narrowing. And finally, we have UBS's view as well. They have a target price closer to 250 rupees. So brokerage is valuing Zomato anywhere between 240 to 250 rupees and doing even better because they're growing faster than Swiggy.
Mangalam, thanks a lot for that. Good going for Zomato as well. 1.5% higher now, above the mark of 200, which means the stock is now 5x from the all-time low of 40 rupees that it had made sometime in 2022. So good going there for Zomato. But with that, it's a wrap on this edition of Midcap Radar. From Sonal, me and the team that put this show together, thank you so much for watching. MF Corner on the other side.
Need it is absolutely required. It's a mandate that you should brush twice a day in the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you